check, check. Good morning, Stacy. How are you? Happy Fed Day, Stacy. Going on, brothers and sisters? Check 1, 2, mic check. Check 1, 2, mic check. Good morning out there to all of you. Another fine day. It's only Thursday. This week has been long, hasn't it? We've got FOMC today. I think we have Biden at 11:30. I don't know if that time has changed. I haven't had a chance to look. There's been a lot of wheels in motion. Harris conceding and then having a phone call with Trump. We also have
at 9:30 a.m. Eastern Time, we expect comments from ECB's Lane and ECB Stenoris, who speak on a panel at the Bank of Greece conference in Athens.
What I think was a phone call between Biden and Trump yesterday or this morning. Now, supposedly there's supposed to be a presser from Biden today, coincidentally, on the same day as a Fed rate decision. All in all, I don't expect. I mean, it would not shock me to see 25 BPS cut from Jerome. Maybe one more in December. Stand path until the don't rock the boat. Until the peaceful transition of power takes place between the Democrats and the Republicans. I did make a note last night, a brief last night, that said it's likely that Jerome Powell has been in contact with Trump, or Trump's people has been in contact with the Federal Reserve. There is an outside chance that Trump would not want 2 rate cuts. It would want those for himself. And it could be a setup where he requests the Fed not to cut rates in November or December. In turn, I don't know how this goes, but they say there's no politics in this, but it could be spun 2 different ways. If Jerome cuts, Trump could come out and say, I told them no cuts. If Jerome doesn't cut, it would leave Trump to be able to come out and say, the Fed's out of control, I would have cut, and when I get into office, I will. And it just could be theater, kabuki theater kind of shit. But if there was, now Jerome doesn't like to rock the boat. And that could be interpreted 2 ways. It could be interpreted where I'm going to do my cuts, wrap it up, transition of power, And there's discussion of him making an exit as well, mostly due to the timing of Jamie Dimon coming public and saying, I'm not going to seek a position within the Trump White House. There was rumors that he was going to seek a position within the Harris White House. Now, I don't know how that all unfolds today. I really don't know how that unfolds. Nothing would surprise me would be the point today. I would expect Jerome to quell any fears. I would assume that he's going to say something along the lines of, I'm here for the transition. I'll put myself, I'll make myself available for whatever they want to do while they negotiate in the background if he's going to stay or go. I don't think you're going to see Jerome come out and be like, I'm not going to be here. Fuck you. Here's your 25. I'm out of here. Fuck all of you out there. You're not going to see any of that. There's probably some negotiation in the background, whether we get a cut or not, just in this transitionary period. It would be warranted just for the transition, even though they're not supposed to be influenced by politics. So it's possible. Regardless, Trump probably comes out and spins whether you get a cut or not get a cut. You're likely going to get some kind of spin. I would expect it at least. Fed's out of control whether they cut or didn't cut. Now, from my perspective, I don't think you get a cut. You want my personal opinion and not like the company line?
And 1 minute from the market.
I doubt you get a cut. And further from that, yesterday morning we were discussing that, and I hadn't read any of the news as it started coming out. But after I discussed that with you, they started dropping that data, or that Wall Street started saying the same things I was saying. There's likely some fear of an explosive growth in inflation down the pipe. And you're not going to cut to meet inflation if there's anticipation of it spiking in the future once the transition of power takes place. Now, further on that same point, would be if you wanted left tail risk today, if Jerome did want to go off script, and he does that once every, I don't know, I'd say every 5 to 10 meetings. Let's slide over really quick.
Open imbalance, the S&P 500, a buy side of 50 million, the Nasdaq 100, a sell side of 14 million, the Dow 30.
Just so you can see the target's way up there. A couple notes this morning. We got a few things to go over here. We are trading 593.25 at the moment. Oh, hold on, there we go over here. Just note that we're coming into local resistance right now. We're trading 5950. This should be the top, though we may have had some development to the upside. We'll take a look right now. But we've got this gamma bar and then one at 6,000. Theoretically, we're at the call wall, though there is potential to go higher here. If you're trying to get spreads off, you're with me and spreads, and you guys put spreads out there a couple weeks ago, 2-3 weeks ago. They start nailing these spreads up here. Like they start pricing in trips to 6,000, 620. Those things are worthless. You might want to start thinking about taking those off. Now, there is some left tail risk here. I would expect normally like data dependent and all that kind of stuff. If there was like a dark Brandon, like dark Jerome moment, he could come out and say, we are data dependent, but are shifting our outlook to no more cuts, but maybe increasing rates. Now, like one rate hike is no big deal. One rate cut is no big deal. But if a succession of rate cuts is bad, and shifting outlook from, remember, there was a time when he said, we believe that our rate hike cycle is over. If you were to say today that they don't think it's over, that is not priced into the markets. And I want to talk about that briefly too. When we start, or the Fed used to be adversarial. When COVID came around, they stopped being adversarial. For many decades, the Fed was famous for being adversarial. And they wouldn't tell you when they were shifting policy. And you'd just be sitting there thinking everything is fine, and they'd pop out at a Senate hearing, or they'd pop out in a presser. Forget like a rate decision. They would just come out and say we're hiking rates, or we're cutting rates 200 points today. We fucked up. We over tightened. And pandemonium would break out. During COVID, Jerome Powell came out and specifically said, we are no longer adversarial with the stock market. We're going to telegraph to you in the future what to expect.
Record high last
and that is important. And what they have telegraphed to us at this point is, that the cutting cycle is over. Now, if they change that gist and say, hey, we're non-adversarial, but we're going to tell them that we are looking to raise rates significantly with the change in regime or the change in economic policy. Or that's been telegraphed. I just want to show you something really quickly here. A couple quick things down below. Yeah, we still have, oh, nope. Wow, you guys bought calls. Woo. You guys bought some calls. We now have important gamma, 6,100. That does lock in that the call wall is now 6,000. You guys are buying higher calls. Woohoo! Now, currently, we're trading 59.50. And it's going to take a lot of work to get above here. There's 86 million in relevant gamma here. So we'll see if we can get above or not. I'm going to show you here, right where we are right here. That wall is like right here. So just let me pop that in for you. Put a little yellow bar there, okay? 59.50. Ding, ding, ding. On SPX. So I don't know if you get that. I think that's the only left tail risk would be the only left tail risk would be that there's a potential path change coming up, or economic an economic policy change that may warrant higher rates. Now, you might be wondering, why would he do that? There was talk yesterday in Wall Street, specifically amongst professionals. Will Jerome Powell save the bond market? How do you save the bond market? You save the bond market by the Fed chair, Powell, coming out and telling you that if we experience a new economic path and they see velocity in the upside of inflation,
2000 index now,
that they have no issues with aggressively raising rates to fight that and combat that inflation. That would be how you save the bond market. Now, that would mean that the Fed is willing to not let it run too hot, and that they will do whatever it takes, regardless of outcome, that would save the bond market. You would drop inflation theoretically. Now, I don't know what that means today. I don't know if that's what happens today. You do want that. He doesn't like to rock the boat. Even if he's going to exit, he's really not that guy. And it does raise other questions, too. Is Jerome's time done at the Fed? Will we go back to a system of an adversarial Fed? That would be up to the chair, and that comes into the spotlight too over this transition period. Does he stay? I mean, if you want to know what I think he stays. I like Jerome Powell. I like the fact that he's non-adversarial. I like the fact that he's somewhat kept himself non-political, and he's worked well with multiple parties, right? He's worked well with Republicans and Democrats. Yeah, I'd like to see him stay. I think he's been good for retail traders overall. I think he's been a plus one. If you're a retail trader, whether you're a bear or a bull, doesn't matter. Buyer, seller, buy, curious, whatever it is you are, the fact that you're a retailer, Wall Street does not like that he telegraphs to you where we're going. You could get severely hurt prior to the non-adversarial Fed. So we'll look forward to that today. We'll see what happens. He doesn't like to rock the boat. That would be how you consider this Fed meeting. If you're like, hey, what's the highest probability? Highest probability is going to be no rocking the boat from Jerome and 25 BPS cut. My personal opinion, you ain't getting no cut. You might get one more in December. I don't even see that one. I don't see any cuts this year. I see a peaceful transition, and he will try to calm those waters. And he will say data dependent. And he will say right now it looks like we've done what we needed to do for cuts to get the economy where it is. A lot of the data points out there look great. And the ones that don't look great are not standalone enough to be fearful. And I would point in particular to commercial real estate mortgages. If you were to compare our mortgage industry right now as a whole, it's very healthy. There are parts of it that are not healthy. There are parts of it actually where the data is the same data we had in 2007 and 2008. But that's only one point. In 07, 08, every point was pointing towards a fraudulent crash. But we're not in that specific thing right now, at this point at least. So I don't see, everything looks good to me. I don't know why you would want to cut right now with a potential economic path change. We're shifting gears. So you can't deny that. There's some argument that Trump's all bluster. He really doesn't care. He's going to make the threats and all that. Once he's in power, it's all about making money, right? It's all about money and power. Sweetheart deals, that kind of stuff. There is that argument out there, but you can't not price in that danger from the threats that have been made. So, hold on here. I gotta move my arm. I went to the doctor yesterday. They put me in a cast or a sling, and I'm not wearing it. So for the rest of today, 11:30 key point in time. We have a gamma wall that's looking super sexy up here at 6,000. That's our call wall is at 6,000. That should be top of the market. I do expect us to squeeze higher into this event, or at least into maybe Biden's speech. I do expect us to squeeze here, either now, get it out of the way before we get to the meeting. But I do want to say that I'm probably going to buy some puts at some point today. Depending on how high we get, I'm likely going to slam the fucking put buy button on that outside chance that the Fed meeting spoils, and it's event driven on the election. So I hope I don't get blown. I hope puts are dirt cheap. Just not yet. Well, a lot of what I'm talking to you about is some of it is, or it's a mix of things. It's like gamma, politics, policy, gamma politics policy, and then event driven, and then Vol's been murdered, that kind of stuff. I still think and I don't think the pullback's that big. So this morning I was looking at, let me show you guys a couple things. So Just gamma driven. There's a thesis like this morning I was looking at Microsoft and tech in general minus like NASDAQ minus Mag 7 or underperformers can stay in. There's an idea here that there's two things. At first I was looking at like Microsoft and I'm like, fucking Microsoft can just keep running. Get that new high. Let's look at Microsoft really quick. And that would mean SPY up, right? Q's up, SPY up. Like let's look at MSFT. Pivots. So MSFT, right? Maybe go to the day. Let's look back here. What do I get there? Get rid of all this crap. Get rid of that. Get rid of that. Okay. So here's Microsoft right here, right? Yeah, I'd kind of like to see before a market pullback, at least like, theoretically, I'd like to see something like that. And we're talking about rolling over SPY right now. But I'm not looking for a full pullback on SPY. I'm not looking for like blood and guts and all that. Just pull back, close the gap so we can go higher into end of year and tag that upside up here. But there's no requirement we actually go back either. On SPY, there are many. We leave many. The gap like we had this week, we have many of those left behind. Those large gaps, it is possible we don't even close the gap. I don't know if I can show it to you here. Let me see here. I mean, you can argue a point right now that we don't close any gaps. And you do like three soldiers, big green day today. You guys know what a three soldier play is, but I'm going to bring this over here for you. You know, you want to talk about leaving gaps behind? Like here's the gap right here, right? Bye-bye gap right there. Let's just go to a daily chart. Let's go to a daily chart and look at them. Hold on. We leave gaps behind all the fucking time. We got a gap down here, left behind. On big up days like this, we got a giant ass gap right here. And do you know why we leave those gaps behind? Do you guys know why? We leave them behind because we have a trend reversal. When we think we're gonna head a certain way for a certain amount of time, and they reverse it, then you get three soldier trade. We leave behind a giant ass fucking gap, and we got one right here. You could theoretically come back down here and literally just leave this behind. Leave most of that gap. I'm shitting you not. This happens all the time. And that would answer the question of Microsoft. You know, Microsoft's like, well, you know, we really see it up there, but you know, we just pull back a little bit, then go there. There's a lot of like tech or NASDAQ. There's a lot of NASDAQ that did not participate in this, that did not participate in this bull run that hedge funds have been short on, that they have not had any skin in the game on, that they have to catch up on to get into the end of the year. So even if we pull back, there is a thesis out there. There's a bull thesis out there that we like kind of melt up. They reprice the VIX. We like melt. Like you might get a pullback to the hourly trigger. You'd be grateful if you got one to the daily trigger. Grateful. That would be a correction. Let's look at where it is right now. I mean, let's just look at this. Let's go to the trigger screen. I mean, you got the hourly trigger coming up right now. Whole gap. If you're just like pulling back to the hourly, like fuck you, bye-bye. Best case. Yeah, that's possible. That is most definitely possible. And you see hedge funds get some skin in on these companies that are underperforming. Look, Microsoft is a prime example. Microsoft shouldn't be here heading into the end of the year. I'm sorry. It just should not. And furthermore, if you have a passing of power, you got a passing of power going on in January, and then a first 100-day plan. So you figure they're going to celebrate, party it up, right? Give you guys a 100-day plan, and then by like middle of February, what do you do between here and there with like all of these tech companies, NASDAQ, the greater NASDAQ? You run the fuck of it up, right? You run it up, run it up, run it up, run it up. New regime comes in, says, hey, you know what? We weren't lying. We're going to do that. We're going to do tariffs. We're going to do, I don't know, round up. We're going to have troops in the street. Meanwhile, everybody's taking their money and ran. Woohoo! Let's blood it for the springtime. Let's get our seasonal low in and find out if they're going to crash this or not. Right? So you get a nice roll down into the springtime. And if they haven't fucked anything up, you're buying a dip and we're off and running to another bull market. Or at least extending the bull market. Or maybe Jerome stays on and everything's peachy, right? Even if we get that inflationary trade, they've run up all this tech that's been left behind. I'd be looking at any tech right now that has not outperformed. I'd be all over them right now. I was looking at a bunch of tech yesterday. This morning, I'm like, oh, this fucking company's not at all-time highs. This fucking company is not at all-time highs. This fucking company is not at all-time highs. I got SPY at all-time highs, and Microsoft's not at all-time highs. Get the fuck out of here. They're going to run this shit up. You know that's what they're going to do. So they're going to rotate from like, what's at all-time highs? Get out of that. Let's go to the next one and run that one up. What you could do is see SPY like on all cylinders, pull back to the daily or the hourly, rip again, pull back to the hourly, rip again, develop more called gamma above. Before you know it, you're cranking to 6,200, baby. By, Jan 1, February 18th, Jan 6. I've got Bitcoin going to 100 and then 130,000. I've told you guys that a million times. Pro traders have access to that Bitcoin outlook. I mean, run it the fuck up. If we get 3 soldiers today, right, that would mean that yesterday and the day before is green all day long. That would mean today we trade 6,000. Today by end of day. At some point today we trade 6. Or close to it. I'm going to be fucking rich. I got like ratios on that are going to end up being like flat. I got a bunch of call spreads on. We close all that fucking shit out. Stoked. What else? So anyways, in the brief last night, I wasn't trying to scare you. My intent wasn't to scare you. It was to give you both sides of the coin for FOMC today. If we run this shit up into 6,000, it's a natural place to sell. If it like sits there, if we sit there, you get Jerome comes out and he gives you 25 basis points. Everybody's snorting cocaine. We rip fucking straight up. Still a good place to sell. Like you want that development of calls to the upside so we can pull back down at least to the hourly trigger. And I want you to know both sides of this because I'm sure that everybody is bulled up. And I'm a bull, but I want you to know every side of the coin. If you get that like dark, not dark Brandon, but like dark Jerome moments today. I put the laser beams eyes on him today because he hasn't had one of those. He hasn't had one of those FOMCs recently where he's done that. The last time he did it was when he got tired of social media. If you guys don't know this, the Federal Reserve scrapes social media and correlates or collates specific words if you're a professional or a retailer, and they gauge your sentiment. And he knew all about everyone thinking he was being political, and by like the second or third decision, he lied to our boy out there from the Post, Nick Timrose. Nick Timrose, like, I'm reading a script that Jerome handed me, and then he came out in the rate decision and he slammed the market and was like, I am not beholden to any political party, and he was pissy. So I don't know if that happens today or not, or maybe we get it in December. But we haven't had a dark JPOW in a while, is my point. The market just bled. It didn't even bleed, it just blasted straight down. Depths of hell. So what else? I think that's all I've got for you at this moment. I have a couple things I got to do here. I got to catch up on emails. I got to talk to some people in the background. So it's 9:54. I'll be here with you for the 11:30 presser. Can anybody confirm that? Biden presser 11:30. I saw it in an article yesterday. I just want to make sure they didn't change it. I don't think Biden's gonna rock the boat either. It says that he does it on Thursday. I don't think you get like anything rock the boat from him. He's an inside. I mean, he's like Biden's. He's part of the system.
U.S. wholesale inventories. Forecast minus 0.
I think it's 11:30 today.
Minus 0.1%. U.S. wholesale sales month on month. Forecast 0.1% on the
11 a.m. now. Now it's not 11:30. Now it's 11 a.m. So they've changed the time. I'll be here with you at 11 a.m. for the Biden presser. I don't expect many fireworks from him. I hope he doesn't go off script. I'm not a fan of stoking fear in these transitions. I think they're very dangerous. A lot of countries have problems with that. So, anyways, I hope that he follows the script today, and that we can. So I'll do that with you, and then I'll come back for the presser or for the press release and presser at 3 and 3:30. Note it's not 2:30. It's not 2 o'clock and 2:30 today. It's 3 and 3:30, a little bit later than usual. I think they price it in right now. If I was Wall Street, I'd be like, if I was Wall Street, I would try to get to 6,000 sooner than later, in case of that danger, or near 6,000. I would attempt to, or park us maybe right here, and then you get your 25 BPS. We hit the 6,000 and insta sell. Yeah, I don't think you can go there. I don't think the gamma's there for you. Maybe you might get the gamma there. If people start slamming the call button, you might get there. I got a bunch of 600 620s, but I bought them like when they were fucking worthless. I'm actually trying to sell them to you as we get there. I just want you to buy them from me. If we hit 6,000 today, can you buy them from me, please?
0.5%, 7.1418 versus the.
It'd be a 250 point fucking rip. So. Congratulations, Uncle JBJ. Good job. Yeah, I didn't sell mine yesterday either. I was like, fuck this, we're going higher. I had a second thought too. I was like, if we reverse, I'll just hold them into January. I was like, either way, I'm making it get paid. So yeah, that's all I've got for you at the moment. I'm not seeing, let me see if there's anything else here to share with you guys. Let me just take a quick peek on news. Also, Winky Face this morning highlighted a company called TPG. They're one of the largest shorts out there right now. TPG, they're a private equity firm. Do some snooping on that company. TPG, why are they so highly shorted? What else I got for you guys here?
U.S. stocks extend gains, NASDAQ up 1%.
Well, this is bullshit too. I'm gonna read you some bullshit here. Okay, so like I think we are near top at 6,000 or coming into it, but I want to read something to you here. There's less room to add longs in U.S. equity index futures. While there was skew towards buying outright equity indices in the rally after the U.S. election, some of the strong buying has subsided. Given the extension of long positioning ahead of this rally, there is probably less room to continue to add positioning leading into the election. There was more focus on the downside hedging via options, especially into some of the key macro risk events and earnings, which had pushed risk reversal pricing lower. Since the election, the risk reversal has popped up to levels in line with levels in the June-July rally. With the shift in risk sentiment. In terms of flows, there was large call buying across various short-term S&P expiries. If you look at tech, that's not true. That's bullshit. You can see like the indexes pull back.
10 seconds.
But if you look at some of like NASDAQ, not Mag 7, like NASDAQ, that shit's been fucking flatter than a pancake since January 2021. It is under fucking valued.
0.2%. Mine is 0.2% lower than 4.
What else I got for you guys?
And wholesale sales 0.3%, 0.3% higher than forecast.
B of A closing the long TYZ4, being near target. Fade most of the sharp rates moves. U.S. rate strategy. The U.S. election caused the consensus sharp move in most rate pricing. Global rate strategy thinks that most of these moves should be faded, with BEs as the exception. The team continues to believe that the inflation impact of tariffs, a flattener, would have more significant near-term curve effect than any modest change in the supply outlook, a steepener. In addition, steepeners have not provided much satisfaction since late September. 2s and 10s, i.e., that means if you get don't expect any rate cuts is what they're saying. And if you do get a rate cut, it's not because of doom. What else? 2s and 10s remain firmly in range it has been in, while the 5s and 30s is now 17 BPS flatter than it was in late September. They're not talking about the 10s, though. Keep an eye on the 10s today. I would definitely have the 10s up on your screeners at home. You don't want to get above 5. It can signal a roll to the downside in the equity market, more specifically small caps. Shouldn't be immediate, but it would be gradual over a few sessions. Normally, I would say normally it's like that. I've got something else kind of cool for you here. This is from Rebecca Chong. Now trading higher, trying to get to our 6,000, baby. Woo! Proud to be in the American stock market. Pay me my money. S&PX now trading 59.59, getting some legs to go higher. R 3 at 595. Sweet Jesus. I'm going to read something else to you here, and this is the conversation I was having with you earlier, where you get the three soldier trade. We don't go back and actually close the gap. You leave it behind because of a trend reversal, major trend reversal. Your pullback's not corrective any longer. It's just pullbacks to the daily trigger. I mean, the hourly trigger. You might get a daily trigger. You might get lucky once or twice until the end of the year. But generally speaking, you're going to be buying dips on the hourly trigger and leave this shit behind. And I'm going to read something to you right now from Rebecca Chung from yesterday. And she wrote this note on the 5th. 2 days ago, right? Or today's the 7th, so she wrote it on the 5th. And I want to read this to you. Expect the SPX to rally 4 to 7%, as written on November 5th. Wednesday's intraday move is key for the next 1 to 2 months. If SPX upside does not reverse today, the rally will likely continue for the next few weeks based on historical observation. Whether this is just part of a choppy market or a true breakout will depend on if the intraday recovery score turns bullish and retail investors stop selling before the end of the year. Given today is not likely to reverse at this point, I would buy upside for the next 1 to 2 months, targeting SPX up 4 to 7%. I'm going to post this for you right now inside of the Discord so that you can read it yourself. I'm assuming this might be a Walter. I don't know if this is a Walter. The recovery score is a Walter Deemer recovery score or not. He's got his own little, or not little, but he's got his own famous recovery metrics. You want to read through this, though. I mean, we did 4% on the 5th. So on Tuesday or Monday, remember when I said I think I just missed the bottom? Okay. Tip to tail on election on over the election night was 4%. They're talking about 2 months of upside, and I think we're already at close to that rate. We're already got close to like 6% right now. Let's look and see where we are. And so she posted this. Look at that. She posted this on the 5th. And this was that bottom, right? This is the bottom. This was 11:30 in the morning. Remember that? Said I think that was it right there, right? That's 4.66%. $608 is 7%, and she said 6 to 7%. So we're there. And she was saying end of the year, and I'm like, oh hell no, we're trading 620. I think David and I agreed we had 6,000. How many months ago was that, David? I think that was the absolute bottom, right, Dave? The last major correction we had, David and I said, where do we go next? We both said 6,000 or just failing 6,600, whatever that is. And then we like drew it out. And then after drawing it out, we wanted to look to see where we were going to go afterwards in the end of the year. Because I was like, we're going to 6,000, we ain't done there. I was like, if we can extend this into February, I was like, how does like 625 sound? 620, 625, something like that. We hit 600, pull back down, catch a nice base. We're running up to 620, 625. That should be market top, by the way. That should be market top until we have a true seasonal pullback next spring or enter a bear market. You get a pullback in there. We hit 6,000, you're getting a pullback. Right here, from right where we are to 6,000, we're getting a pullback off that. Getting a pullback. It should be to like 525, 550, but it's possible. I wouldn't be counting my chickens, though. Oh, you got it, David? I got it something like let me see, should we do this like a shorter? I had it here, David. I don't know what the fuck I did with it, man. Spy. This is a new layout. Get rid of that. Every time I do these, David, they don't listen to me. It's like something like 600. Let's pretend that's 600. It's like, I'm not going to tap it down a little bit for you. 625. I'm not going to make it perfect. We ain't doing perfect right now. Can I get this thing going?
So Chevron completes U.S. Gulf oil shut-ins ahead of the storm.
Having some problem. Oh, whoa. Too many. Too many. See, this thing will run itself out. That's monthly. That's weekly. $600. Yeah. Assuming that's summertime right there. Summertime. Something like that. Right over there. Yeah, something like that. My thing here is, do we not go that deep? Let's just stay there. We're up there to 625. Something like that. I really do think that there is a firm chance here that you're bouncing down. You think it's all over. We're going to get the doom December. Bam, straight up into February. And that's December 30th right there. There's a real chance of that just staying just like that. A real chance of that happening. Come back from vacation, they blast you down. You think it's all over, and they rip you up one more time in a Feb. There's a second path too. You get up here, you do this one, and you're holding all of this right here. Whoop. You're gonna be really wanting to watch this jump point right here. That's 575. 550s right here, 525s right there. At any rate. nail 6,000 for me, please. We'll deal with whatever the fallout is. Just hit 6,000. We'll look for the reversal on whatever the pullback is. We're almost there. We just got a high just now of 59,431. We're pretty close. Like we're on a 1 minute chart right now. It doesn't really matter, does it? The only thing that matters here, David, is that we get as close to 6 as we can. Hit that, nail that 6,000. Look for a fucking dip for 620, 625. Have everybody tell us the market's going to crash. Ugh. Have all the bears come out and tell us how awful the world is. Make sure that you guys are going inside of the Discord right now and reading this note from David right now. Yeah, that's like the larger count too. If you guys like Elliot wave, that those numbers I showed you match up to a count, a bull count to get up there. Now that count ends at 625, and then we go into a corrective quick count, and I don't know how big that count is. I don't know if in that corrective move we fail to get another all-time high on SPY. That could be the end of the bull run. We'll have to watch that. So the corrective move off of 625 and down, when we come back up again, if we fail to get the new high, that could have been top of the market, like 625 could be top of the market. We're not there yet, though. We're not ready. We're not ready to even call that yet. We're not even there, but 625-ish, I think, is top of the market, but I'm not positive.
On the prior build of 78 BCF.
It all depends on how you count it. My big question is, you guys want to see something bigger? Like, I don't know if I can tell this yet, but here, let me show you one more thing. I promised I would show. Promised I would show top of the market stuff. I got to go back and count more, but I'm like wondering about this movement here. This is the COVID stuff. So like you got this movement right here, right? You got the post-COVID stuff. And then you're going to be, does this mean we got 1, 2, 3, 4, 5, right? What does this correction mean here? This is going to be a tough one. This one's going to be a big fat question mark.
Trump adds pressure to act.
That's the big one, right?
Do you want to stay up to date with the latest and
That's a pretty big one.
News for
what is that fall right there?
Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month.
That's a 23% move down. That's a stock market crash. It ain't now. It's in the spring. The bigger question becomes, do we go into a bear market or a lost decade or not? Like, I'll take a crash. I got zero fucks to give on crashes. I'll take crashes all day long. I can't stand, like, lost decades. I'm happy-ish with Jerome's sideways trade for COVID. COVID trade or Jerome basically traded the market sideways to lessen the damage to the market. We were due like like when we were in January of 21, we were due for like a 2001, 2008 style crash. But he put so much time on the market that we dragged it out. The risk to the downside dissipated as time passed because higher frame triggers came higher, like the monthly and not the monthly, but the quarterly. 6 month came up. and it limited the damage to the stock market by trading sideways. I don't know if they can do that again this time. If Jerome's gone, policy change, I don't know. I think if we're going to run hot and heavy, we're also going to run hot and heavy in crashes. It reminds me of like 95, 96, 97, 98, 99. Economy was wild. It ran hot. We'd pull back like 17, 20, 25% violence to the downside. Then we'd go up like 30%, 35%, like violence to the upside. Violence to the downside, violence to the upside. But there is a chance of a lost decade too,
EIA natural gas
depending upon policy. When Elon said 2 years of pain,
8 BCF.
That's if nothing goes wrong. If anything goes wrong, that's a lost goddamn decade. Like, you end up having like 3 or 4 years of downside move, and then you get like 3 or 4 years of accumulation. And then the last part of that 10 years, you come right back to where you started at the top. I don't know if we'll do that, though. That's all speculation, means nothing. It's all astrology. Stagflation, which is what we thought we would get. But if you had depression or recession, do you want to see what that looks like? You guys want to see what that looks like? Want to just do what? You want to feed bear inside of you? Give me a second. You want to see what, like, World War III depression, where we trade? Yes. I never comment on your stream, but I'm a bear. Show it to me, Daddy. Show it to me. I know it's Fed Day, but let's see if I can get the bars in there. Hold on. There we go. There's the bars. You guys ready? You guys want to see it? Take it back to 1871. Way back in 1871. You've been counting this since 1871? Yes, we have. Oh, oh, you know what? I don't actually have it on this tool. I'm going to have to get it for you guys. Shit. I have to get you. I will put it on the tool so you can have it. I will have that on here. I will get it on here. I have another tool with it on here. This is the Great Depression right here. We actually blasted through the 6-month trigger. We went down to a 1-year trigger. And then this is the war. We went down to a yearly trigger there too. It's the only 2 times that we've gone down to a yearly trigger. But some fascinating things you can see here would be crosses of the, which is this is what's fascinating about this. When the daily crosses the weekly, the monthly actually goes vertical to the downside. Before you're even down there, the monthly goes vertical to the downside, right? Blast through the monthly, the 3-month, and the 6-month. These are things you want to be looking for. When you see the cross of a monthly through the 6-month, that's bad news. Not like floating into it, but like vertical. Same thing over here. This is the World War over here. We were just recovering. You get the Roaring 30s right here. Bam, right? 1937. Things start to kick off in Austria. We start blooding down here. Not so bad here, but then the U.S., of course, gets involved, and we go down to the depths of hell again. Now, in modern history, only very rarely have we traded that deep. Oil crisis, we did, right? That was pretty bad. This right here, this is 1974-5. This is what we've got, like stagflation, prices crazy, that kind of stuff, right? This is 1980, big crash, right? And what's cool about this, right? You got Reagan, don't you? Reagan comes to power. And look at this. It's kind of fascinating. This right here is February 4th or 11th.
10 seconds.
This is when Reagan became president. And what do? We crashed. In February, had the inauguration, tip to tail.
BCF build 69 BCF, higher than the expected build of 68 BCF.
21%. That's what I've got targeting right now. We do 21% straight down, and the question becomes, do we go violent? That's a doozy. Now, in modern history, recent history, we haven't seen crashes to the white or gray line in modern history in some time. We saw tech being overpriced. We traded down to the 3-month trigger. The fraud, 2008, we traded down to the 6-month trigger. COVID, purple trigger, quarterly, excuse me. You know, this would be overpriced tech. So if we crashed like today, overpriced tech, 3,100. World War III below 2257. Fraudulent market 2250 today. Fraudulent market 2250. 3,100 today if it was overpriced tech. World War III probably 2,000, 1,500, somewhere in there. I said it was the 1-year trigger, but it's not. But I got an extra trigger for this. I'll get it on there for you. I got one more. Look at that weekly candle right there. That's a weekly candle. Look at performance after a weekly candle like that. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6. 2 weeks down. 1. Look at that weekly green. How often have we had a big green candle like that? And we haven't continued to the upside on SPY. Very rare. Look at that one right there. That was October 30th. Big giant green candle. It's a reversal candle. And look what we did afterwards. Just face ripper. You're not getting that big red candle after that. You're not getting that big red candle after this big green face ripper. You're not getting a crash. Not yet. You are just not. It's not today. You're likely going to get continued strength into like February, January, February. Look for dips to buy on the hourly trigger. Put some spreads on them and just don't even look at them. Hey, what you call it? Warren, what are you saying? You said Warren. Meanwhile, Warren's sitting in tons of cash. They've been saying that about Buffett since January. Every time we pull back, people are like, Did you hear that Buffett just sold more Apple or more this, more that? I'm like, that dude's been selling since Jan 1. That's true. He's been selling since the first of the year. I heard one argument this week, though, or some people make that argument, and they imply that the market's going to crash like today. Like, that's the implication. And then, this other guy this week goes, well, it's because it takes him so long to unload. He doesn't want to disturb the market, so it takes him a full year. I'm like, okay. All right. That he's been unloading the entire year. But part of that's probably has to do with his charter, but yeah, I wouldn't be basing. I mean, I like what Warren Buffett. I love Warren Buffett, but you are way more liquid than he is. And that guy was mentioning that. He was like, he can't unload all of his shit
Greece conference
all at once. And I'm like, I know. But you aren't Warren. I mean, I would take what Warren has to say, and use what he has to say for sure. But you are way more. If you had $100 million, you can unload that quicker than anybody else. I mean, shit. Sometimes I'm trading. You figure in 0 dates. Sometimes, I mean, some of you guys in here have seen me, right? Some of you guys even know. I'll buy like 2,000, 3,000, 4,000 contracts. What the fuck is that controlling? How many millions of dollars am I controlling? When I sell those things, it's like jagged, like I feel like my computer is bouncing when I'm dumping them. But it ain't, it's not a Warren Buffett trying to unload. Yeah, what they do. Some of what they do is rules that they have in their charters, like they have to unload at certain percentages. If they lose so much, they're forced to buy puts, or they're forced to sell at a certain price, even if you know it's going up, because of risk, and not only risk but weighting inside of their portfolios. There's rules. You can't be like that one guy that said, I went all in on what is it called? DGAS. I put our firm's money in DGAS and lost it all in 1 month. Remember that guy when he made the video? Can't do that shit. You go to prison for that. Trading 594, baby. 45. Yeah, they use dark pools, but not him. That's all institutional, like bank stuff. There's shit. I got this for you guys. I got something for you guys. I found it the other day. Hold on a second. I got something for you guys. So, if you're like an active trader in the market, Buffett's not that guy. Buffett's not like, I got an Apple this week and I got out of Apple next week. You get what I'm saying? Like, Buffett's not. They're not that kind of firm. They're not. Even like GS has GS Investments and then like GS Trading. I got something for you guys. I got something cool. I found some stuff the other day. I got some cool stuff for you. I was going through I spent hours. Where is this? I got something for you guys on dark pool stuff. Please tell me I didn't fucking get rid of this. Please, please, please tell me I didn't get rid of this. I found the story that I had on, oh, dude, I might have dumped it. Fuck. I was going through my my bookmarks, and I had the article for Flow Algo being. I don't know if it was Flow Algo that was being sued or one of these companies was being sued for marking dark pool lots and assigning them to banks. Shoot. I think I might have deleted it. Why did I delete that? That's stupid. Oh. I shouldn't have done that. I can't believe I did that.
At 10:45 a.m.
Let's see if I got it over
Eastern
here.
time, we expect comments from ECB Stenoris, who speaks on a panel at the Bank of Greece conference in Athens.
Come on, tell me I got this. Oh, right here. I got it. You guys want to read something cool? So, I used to use Flow Algo, and of all the flow services, they were the one that I'm gonna post the link for you in the Discord. It's back from 2023. So this article's from 2023, right? I used to belong to Flow Algo, and they had a help guide. They were like, this is how you figure out who the dark pools are coming from when they're coming into the market and out of the market. And we figured out how to assign those dark pool flows. And so I'm like reading the help and all that kind of stuff. And I'm like, man, of all the flow services, this one fucking they nail it. Like, you can tell when the banks are buying and selling every stock out there. I'm like, you'd know when they were selling Apple. You would know when they were buying Apple. You would know when they were buying and selling SPX. You name it. You knew what they were buying and selling. It was baller. And then, like, one day it wasn't as good of a service as it once was. I was like, I wonder what's going on. So I stopped paying for it. And then that article came out like 6 months later. And they were talking about suing these guys. Not that service, but the data service that provides data to some of these services. And they were able to figure out the assignment, which is, the trade secret, right? Tradecraft for banks. Did you read that? Conventional investors is market makers, order flow providers, and banks want to see what you're doing because it's their market, and they do not want you to see what they're doing, nor each other. So there was another paper on this article that came from the Fed. And the Fed, or I think the Fed addressed it too. And the argument, maybe it was the Fed, or maybe I read the court papers on that. And what their point was that they could trigger a stock market crash if they all knew what each other were doing. You'd get copy trading from large firms, like if JPM sells and GS sells, and then UBS sells all at the same time. So they want that data private because they're so big. Even if it was dark pool, it wouldn't matter. You'd get like the market eating itself up and down with true price discovery. That's their thesis. But yet they know what you're doing.
Shortly,
you're like 25% of the market, 20%, 15%. It used to be 15, 20. Yeah, you're the conventional photon trader. You're the conventional trader, brother. Yeah, and I'm thinking to myself right now, if we can get close to 6,000, if we can get to like 5850, or excuse me, not 5850. If I get to like 5980, somewhere in there, in that range, 5975, somewhere in there. I'm gonna take my call spreads off, and I'm looking for some puts, either into the event, or on a squeeze in the event, for a pullback. I'm assuming we're going to develop a call gamma today at like 6,200. We have call gamma right now at 6,100. Finally, we just need a little bit more. We need 6,200 development. Maybe 6,300 would be nice. No put yet, bro. I'd like it to be event driven. We're in grind higher, pause gamma. What are we looking for here? Biden live? Biden's speech is going to be on in 14 minutes. Give me just a few minutes here to take a quick break. I'm going to drink some water. Drank the pee bag, and I'll be back with you guys at 11. We'll put the speech on for you. And just note that even if the speech is received positively, just be wary as we approach this. Let me just show you one more thing here, too. So we're at 5965 right now. So there's zero gamma here. 5970, there's zero gamma. 5975, there's a ton of gamma right here, this bar. Okay. Not a ton, but 5975, it's pretty significant. And we're coming into it right now. So 5975. Should get a nice squeeze. And there's another note in this squeeze, too. I want to show you one more thing, okay? Right about there. So right here, this is that yellow thing that you see right there. That is R3 on a 1 week. So that yellow line right there, this is R3 on a weekly basis. On a daily basis, 596 right here. Okay? So just note that as we come into this speech from Biden, if you look down below here, I've got two lines here, one right here, one right here. And that's going to be your weekly resistance and your daily first next bar, next target, okay? It's right there. And we have an event here in 10 minutes. I'll be right back with you guys. Just a note that VIX, we have not repriced it yet, but just note that the place to buy VIX down here, we are coming into it right now. The VIX 9-day is slipping into a place. So it's getting shanked right now. The expectation to be buying the VIX down there. Now the question becomes, are we going to reprice the VIX? Or maybe we get a nice little squeeze up here in the VIX and then back down again. And note here that half an hour trigger and hourly trigger are way up here. Like a half back trade, the VIX, even if it's going back down, that would close the gap on SPY. So just take note of it now. If you want to know what a repricing the VIX looks like, you can see one right here just so you can see what the action looks like. And break down and then below. Let's be looking for something. Price action like this, slip underneath, and then it's this kind of nonsense. Market should start to top. And we'd start that path of over again. Two minutes until the speech.
Schools and our streets from gun.
Another note here too, we're starting to lose velocity on the hour or on the half hour velo on a 30-minute basis. Just note that.
The US to sell $81 billion in 3-month bills on November 12th to settle on November 14th, and to sell $72 billion in 6-month bills on November 12th to settle on November 14th.
SPOO's trading S2 on a weekly basis. Also coming into the first week, Gamma bar at 57 or 59.70, or 65. Everybody's long. There ain't nobody that ain't long. The entire market is long. All right, I'm not seeing Biden live here just yet. Oh, here we go. Here we go. This looks like, I forget the name of where this is, the East Lawn or whatever. West Lawn, is it West Lawn? It's Biden's first public speech since losing the presidency. Yeah, Olaf, there was a someone was stoking that those flames. They were saying, I'm trying to think what they said. I've heard two crazy things. I heard like some of it wasn't crazy. I shouldn't say all of it was crazy. There was ideas of, instead of sending as much equipment as they could, to send tons of cash to Ukraine. Supposedly they've already sent a bunch of cash in reserve to NATO, or committed, or it's been sent already, but they were saying load it up. But then there's some crazy ideas too. They were saying stuff like, which I don't think they should do, of course. I don't know if they were shit posting, whatever, but they were like, hey, you could make a bunch of shit legal by the stroke of the pen for a limited time. And then I heard there was one other crackpot thing where they would make her president and then do something vicious to not pass over the presidency, but that shit shouldn't even be discussed. Shouldn't even be reality. You know, I was reading some figures yesterday. 2% of 18 to 25-year-olds voted I was like, what? It was like 2% of 18 to 25-year-olds voted. It's like, you got to be kidding me. I'm like, I don't want to hear anything. Yep, stops triggered. I don't want to be hearing anything from an 18 or 25-year-old on Reddit. Just be quiet. Yeah. 2%. So if you see a kid protesting right now or taken to the streets, they have no right, in my mind, to be protesting. You don't vote, shut up, sit in a corner. You know, not only that, bring it on. Like, I want crazy RFK. Yeah, 2%. 2%. Those are the numbers. You got it. That's what it was, right? It was a no vote to protest. So you have no say. I was shocked at that number. I was like, the fuck you just say? It's like, you can protest all you want, but you don't get a say. Well, even if you threw your vote away with like Mickey Mouse or something, I'd be fine with that. But not participating, no thank you. Only 52% in your retirement community? That's low as fuck too, right? Like, I don't want to hear most. Like, I was talking to Winky about it yesterday, a day before. I'm like, when I was looking at some of the turnout numbers, I was like, half of these people that are screaming didn't even vote. I was telling Winky, I'm like, I'm just gonna assume at this point that like half the people I speak to didn't even fucking vote. I'm just gonna assume you're lying to me, you didn't vote. Regardless of who you voted for. I really appreciate people that vote. And I don't care who you vote for. That's your civic duty in my viewpoint. You want a voice? We should know if you voted. Not even who you voted for. It's like, put it on your license. This person voted. I want to see your license before I even discuss politics with you. Like, you know what I mean? I don't even want to talk politics with you, buddy. You didn't fucking vote? Fuck off. Shut up. Yeah, I don't care who you vote for. I really don't. Just your civic duty, you know? Or if you're going to talk shit. Like, that just shows the level of shit talking of people that didn't even fucking vote. And I mean, maybe you think people shouldn't have to vote but can bitch and whine. I don't. I'm like, shut up. Like, go over there in the corner, and you're going to just do what we tell you to do. You know what I mean? You get no complaining from you. Just be quiet. You're on the ride. Yeah, I'm not for like this. I'm not for like I'm protesting by not voting. Vote for your candidate. Vote for your candidate that didn't make it in the primary or something. Whatever it is you want to do. Just don't be like not voting.
ECB Stenoris says if Trump does what he says he will on tariffs, it will negatively impact the European economy.
It's like it's your civic duty. It really is. Or be quiet. One or the other. I'm like, as time has passed, I more and more, I don't like the social credit score, but I wish there was a corporation like the Internet Address Corporation. Like, they're kind of like a no-name. I mean, it's hard to do that, where someone wouldn't gain access to the information, like who you actually are. But I would love if there was just a way to, like, I mean, I don't know how, like, they can do that for web addresses, but it would be fascinating to, like, not your name, just, I don't know, like, male, 45 years old, lives in the U.S., or even just lives in Michigan. Voted, didn't vote. I'll make an easy point for that. Like, I don't want to go, like, into a conversation about whether this movie was good or TV show was bad in, like, a room full of 16-year-olds and not know that I'm talking to a 16-year-old. Like, I'm not going to argue with a 16-year-old if they think this movie is the best movie of the year. I'm just going to move on.
Wait and see with Trump's policy.
I'm not going to get into a conversation with I don't know, a man from India about how women don't like him in the U.S. or something like that. You know, like I don't know. Like I don't want to get into that argument. You know what I mean? I don't want to be fighting with 5 women in a conversation that are like, you know, this is my point. I just don't. Like, I want to know who I'm talking to. In real life, you get to know who you're talking to, right? So you don't know who you're talking to. Am I talking to a bot? Am I talking to like a boiler room in China, right? Like, who am I talking to right now? I think that would change the landscape of social media in a big way. But you'd have to figure out a way to keep it anonymous still, like proof who you are, and then some kind of an entity similar to the who is, right? Some kind of entity like who is. And if you didn't want to partake, or if you're like, well, I don't want to partake in that, that would be fine. But you would have like lesser credentials. Like you wouldn't get like upvoted. You wouldn't be allowed to be upvoted. You wouldn't get any traction. And people would, or you just tell people this person wouldn't say who he was. So if they're dropping like heavy information, at least realize that this person's anonymous. But even if they have to be anonymous, it's like I'm fine with anonymity, but I wouldn't want to get into an argument with anybody that was anonymous without a blue check mark. Like, it's like Twitter to some extent. Theoretically, what they're doing, Twitter, is good. How it rolls out is not good. I would prefer it to be something that you don't pay for. But at least you kind of know who you're talking to. Like you kind of know you're talking to the Washington Post, or you're talking to, you don't even need their name, just female, male, 13 years old. 13-year-old male telling me, like 13-year-old male from suburb and some expensive suburb telling me how girls suck. Like I don't want to argue with a 13-year-old boy. Or to even talk to a 13-year-old boy about women or girls or sex or any of that kind of stuff. I think here we go. We got a Marine outside. He's posting up. There's a whole bunch of rules surrounding this job right here, too. Like specific rules as to opening the door and closing the door, and what do they do in certain situations. Yeah, I really don't care if you like. There's some that system for all of the internet would be kind of rad. I don't care what your name is. The only thing I'd care about would be, am I speaking to a 15-year-old boy? Like, I don't want to and I don't mind speaking to a 15-year-old boy, but I want to know contextually who I'm speaking to, right? Like, what am I going to say to a 15-year-old boy? You'll be older soon. Don't worry about taxes, bro. Worry about doing your math homework so you can get into college.
Audio check 1 2. Audio check. Last audio checks for press. Audio check 1 2 1 2. Thank you. Andrew, you good? Last audio checks for press. Check 1 2 1 2. Last audio checks for press.
Can you guys hear that out there okay?
Audio check 1 2. Thank you.
Cool. Do we have some concern about talk of getting rid of the Department of Education? I don't think. I'll be honest. Like when I saw some of the voting numbers, not only did you lose, we think you lost all three. You lost the presidency, the Senate, and the House of Reps, almost at this point. If you have a new regime like that,
Fed bids for 4-week bills total $274.5 million.
there shouldn't be anything coming out of a Democrat's mouth right now, I'll be honest with you. It's not your regime. I don't even think you should be protesting. You got really nothing to say. Like, I got nothing for you. I'm a Democrat. I don't really want to hear it from Dems right now. Let's just be quiet. Let them do their thing. Like, just let them do their thing. Give them their 3 months, 6 months to settle in. You had your chance to vote. You didn't vote. So sit in the corner. Let's RFK go crazy. If it was close, or if it was like a landslide, like Democrats needed a landslide. We're saying no. You didn't do that, so go sit in the corner. Go over there, be quiet. Give them their time. Biden trips and falls on the podium, the market down 100 points.
Hey guys, do you have me?
What color tie does he have? Red?
I'm gonna stand. I'm gonna ask.
Blood red.
We're the pool.
Blood red.
Hi, Karen. I got you.
Black tie.
Thank you.
Purple, blue, yellow, white. I'm going with blue. Like a deep navy blue. Shiny blue. I'm not fucking leaving. Biden comes out, he just says, "Fuck you, I ain't leaving." Fucking pandemonium erupts, market down 500 points. Trump would fucking implode. That shit would be funny. Not gonna lie. Fucking markets would have a meltdown. Twitter would be on fire. Like, Twitter would be like a dumpster fire. A true dumpster fire. Like, you'd open it on your computer and fucking flames would be shooting out of your fucking laptop. We're invoking the 14th Amendment. The 4th, the 5th, the 4th and the 14th, I think, of the two. Fucking, oh my God. Even I'm not down with that shit. Not anymore. You could have done that shit. You had all your chances to do that before. Get out of here. Sit down. Like, you had your chance. I guess I got to move that up to the 5, right? Yeah, RFK. Did you see the shit from him this morning? Winky, did you see the shit coming out of his mouth this morning? I was like, this is going to be the biggest shit show I have ever in my life seen. Like, I'll be honest, like, I'm at this point right now where I'm like that SS guy that worked for Nazi Germany that went to work for Israel, just like selling himself to the highest bidder. Like, fuck it, let's go crazy town. Like, let's do it. Take it to its ultimate thing. Like, let it burn. Yeah. Auto Scoresny. Like, exactly. Like, get the what is it called, the warish or something across my face. Like, have my oldest like slice my face open with a they have her fence me or something.
That's 11:30.
That was great. It was good.
Time The US sells
It was, yeah, dueling scar, exactly.
4-week bills.
What are they called? Wars? Wassers or something like that? It's like a badge of honor for private school in Austria and Germany. It's come back into fashion for hardcore right wingers, believe it or not. They're doing it again. But I'm like, let's RFK do his shit. Like, let's see what it's gonna like. The FDA must be having meetings this morning with their faces melting off with some of the shit that's being said today. Some of the shit RFK is coming out today that like their faces are fucking melting off today. Garen fucking teed. They shit themselves. They keep a piss bag just like I do. The polling was hilarious. So, like, if you showed up and said you're an observer, you were fine. So I have to say I'm an observer. If you show up in Michigan and you say you're a challenger, unless you're a challenger that's approved from, like, a special interest or a party, they tell you to fucking kick rocks. So, of course, some dumbasses come in wanting to be challengers. And if they just said observer, they could have went and sat in a chair. And they'd be fine. But, you know, they can't do that. They had DJ in the parking lot. It was a busy day. It was packed. It was fucking packed. So it's kind of funny watching, like, the judges, like, yell at these people. Like, what the fuck are you doing? People that want to watch the world burn. Yeah, I definitely want to go back to raw milk. We should definitely go back to raw milk. Keep the chemicals out of our food. Actually, if I was to get the chemicals out of my food, I want the what is it? The antifreeze out of my what's the shitty liquor that they put the antifreeze in the US? I want the elk. And it's got the horns. It looks green or whatever. No, not Fireball. Fireball has it, though, too. Fireball has it, and the other one has it. Fireball has that chemical. It's banned in the EU. Make everything out of Play-Doh. From this point forward, everyone gets crayons. No more vaccines. Like, I want to do it. Like, I want to do, like, no vaccines. Just, like, start not vaccinating people. Large swaths of the population. I'm serious. Oh, God. I was reading some of the history of the FDA, how they came about, and they like companies were like putting like like leftover sawdust and fucking milk and shit. Like they're putting chalk dust in milk. That's real. That like you guys should go on like Wikipedia and read about the history of the FDA. It's fucking wild. Oh, dude, Europe's got great farming standards. Outstanding farming standards. Outstanding farming standards. Yeah, I'm with you, Tazo. Oh, Dark Brandon glasses. So I can turn this up for you guys.
Good morning, good morning. Thank you, please. Thank you. Good to see this cabinet and staff together here. Thank you. Thank you, thank you, thank you. Please. Thank you, thank you, thank you. It's good to see you all. Particularly good to see my granddaughter sitting in the front row here. Hi, Finn. How are you, honey? For over 200
It's
years,
11:30 a.m. Eastern
America
Time.
has
The US
carried
sells
on the greatest
$95
experiment
billion in 4-week
in
bills.
self-government
High yield
in the history of the
for
world.
4.58% and
That's
private
not
cover of
hyperbole, that's a fact.
2.82.
We're the people. The people vote and choose their own leaders, and they do it peacefully. And we're in a democracy. The will of the people always prevails. Yesterday, I spoke with President-elect Trump to congratulate him on his victory. And I assured him that I'd direct my entire administration to work with his team to ensure a peaceful and orderly transition. That's what the American people deserve. Yesterday, I also spoke with Vice President Harris. She's been a partner and a public servant. She ran an inspiring campaign, and everyone got to see something that I learned early on to respect so much, her character. She has a backbone like a ramrod. She has great character, true character. She gave her whole heart and effort, and she and her entire team should be proud of the campaign they ran.
Market's holding up.
You know, the struggle for the soul of America since our very founding has always been an ongoing debate and still vital today. I know for some people, it's a time for victory, to state the obvious. For others, it's a time of loss. Campaigns are contests of competing visions. The country chooses one or the other. We accept the choice the country made. I've said many times, you can't love your country only when you win. You can't love your neighbor only when you agree. Something I hope we can do, no matter who you voted for, is see each other not as adversaries, but as fellow Americans. Bring down the temperature. I also hope we can lay to rest the question about the integrity of the American electoral system. It is honest, it is fair, and it is transparent. And it can be trusted, win or lose. I also hope we can restore the respect for all our election workers who busted their necks and took risks at the outset. We should thank them. Thank them for staffing voting sites, counting the votes, protecting the very integrity of the election. Many of them are volunteers who do it simply out of love for their country. And as they did their duty as citizens, I will do my duty as president. I'll fulfill my oath, and I will honor the Constitution. On January 20th,
Biden says we will have a
peaceful transfer of power here in America.
January 20th, not 6th.
All our incredible staff, supporters, cabinet members, all the people who have been hanging out with me for the last 4 years, God love you, as my mother would say. Thank you so much. You put so much into the past 4 years. I know it's a difficult time. You're hurting. I hear you and I see you. But don't forget all that we accomplished. It's been a historic presidency. Not because I'm president, because what we've done, what you've done. A presidency for all Americans. Much of the work we've done is already being felt by the American people, but the vast majority of it will not be felt over the next 10 years. We have legislation we passed that's just only now just really kicking in. We're going to see over $1 trillion worth of infrastructure work done, changing people's lives in rural communities and communities that are in real difficulty because it takes time to get it done. And so much more it's going to take time, but it's there. The road ahead is clear, assuming we sustain it. There's so much we can get done and will get done based on the way the legislation was passed. And it's truly historic. You know, we're leaving behind the strongest economy in the world. I know people are still hurting, but things are changing rapidly. Together, we've changed America for the better. Now we have 74 days to finish the term, our term. Let's make every day count. That's the responsibility we have to the American people. Look, folks, you all know it in your lives. Setbacks are unavoidable, but giving up is unforgivable. Setbacks are unavoidable, but giving up is unforgivable. We all get knocked down. But the measure of our character, as my dad would say, is how quickly we get back up. Remember, a defeat does not mean we are defeated. We lost this battle. The America of your dreams is calling for you to get back up. That's the story of America for over 240 years and counting. It's a story for all of us, not just some of us. The American experiment endures. We're going to be okay, but we need to stay engaged.
This is good. It's not confrontational.
And above all,
no volatility.
I'm so proud to have worked with all of you. I really mean it. I sincerely mean it. God bless you all. God bless America. And may God protect our troops. Thank you, thank you, thank you.
That was good. Nice and easy, baby. Bears and tatters right now. Bears and tatters. All right, so back to the original game plan. FOMC. Back to business here. Oh boy. If that was Trump conceding defeat, I can't wait for that speech. Why is there tear gas? What's going on in the front lawn of the Capitol right now? Yeah, that was good. It's just right what I wanted to see. Just nice and easy. Don't rock the boat. Peaceful transition of power. Nice and easy. No shots. No defiance. None of that stuff. Just good job. Stick to the speech. Stick to the speech. All right. Let's take a quick break. No volatility there. We should resume to the upside here. Justice for Peanut. I thought it was hilarious when MAGA picked up Peanut and then they found out that his owner had an OnlyFans. I thought that was hilarious. And then they just stuck with it. They're just like, didn't even flinch. There was like, just like that. Oh, you guys didn't know that? Dude, the owner of the Peanut's owner has like a sex OnlyFans account. You didn't know that? You guys didn't know that shit? I'm dead serious. Look it up. You didn't know that? Oh, dude, look up OnlyFans Peanuts owner. Mwah. No, it's all over the internet. You didn't know that? Like, it's literally like front page of everywhere. Where do you guys get your social media from? Dude, this is OnlyFans here at nighttime. It's Only Feet. You didn't know about that? I turned this stream off, boom, straight to Only Feet. I didn't understand the peanut thing at all either. I was like, what is all this? So I went down to I went to Out of the Loop and I figured it all out. Like I figured out the Harambe and then like I'm not gonna go down I'm not gonna tell you everything, but they explained it all there. Oh yeah, they spend a lot of money on OnlyFans. Wolf Richter, famously, or at least in my world, famously, was talking about like GDP and like services versus goods. And when you guys couldn't buy a house, you guys that like bought all furniture and shit during COVID But during the recovery, you guys spent so much money on OnlyFans it wasn't even funny. Like a part of our GDP is our services GDP is based on you buying internet services. And I don't mean like I don't mean like going on Amazon and buying, I don't know, a new computer, buying the thing you do on the computer. It was kind of hilarious. No. OnlyFans. Oh, dude, like OnlyFans. The average ready for this? You don't spend $3,000 with me. I need to do a goddamn OnlyFans. Average. Let's look at this. I gotta show you guys this. Hold on. The average is $100 to $300 a month. The latest data. Hold on here. What do we got here? The average is around $2,000. God damn. Does anybody here use OnlyFans? Anybody here willing to admit that they go to OnlyFans? I don't understand like the want of it. I like good old fashioned porn. Like I've never understood like OnlyFans. But I have a friend that does it, or I have an ex friend that told me that he did it and explained it to me. He's got like an online girlfriend, and he spends a fuck ton of money on her. And he told me all about it. Oh no, that ain't nothing. My friend, he makes I think he makes about $180K a year, somewhere in there, single. And he considers her his real girlfriend, and he like gets her presents and shit and like all kinds of crazy shit. He talks about her in like the second person, I guess, not third person. Or yeah, he's like my girlfriend, and I'm like, you mean your OnlyFans girlfriend? He's like, yeah, that's a real thing. I don't know. I think that okay, so I go out to a lot of I go out to like cool stuff, and I in the past past 2 to 4 years, no, maybe 2 years. Past 2 years. If I go to like an event, like a high-end event, like if I go to like something like Burning Man, or I go to like, I used to see it more in Burning Man like a decade ago. You knew that I knew, I was like, these are definitely porn stars of some kind. But if I go to like a show, if I go to a F1 event, or if I go to anything with a VIP concert of some kind, rave kind of stuff. I recently went to a water event, and what I noticed is that I'll see 2 or 3 of those girls with guys they don't belong with. I'm like, that's an OnlyFans girl, and that guy has no business being with her at all. And definitely not how she's dressed, and how the look. But I think it's more prevalent than I've ever seen it. I used to live in LA, and that was more common there to see like porn. I would see porn stars out a lot. But the OnlyFans thing, where I live in Detroit, it shouldn't be that common, but it kind of is. And I'll see guys that I'm like, that guy's got money, and that girl, that definitely is not a girlfriend. You can tell, right? You're just like that. That's pretty inappropriate for what we're doing here. I don't think. I think most guys, they get led on to think they're going to have meetings with the OnlyFans girls. I would expect that you'd need some coin to meet them in real life. Or he told me that if they get to know you well enough and trust you, they will meet up with you. But from what he told me, he's never met her. But he spent a fuck ton of money on her. Like, I'm talking like bank. Like, men with disposable income. Man, that's why I'm not a woman, man. I'd sell everything. I'd be selling like toe jam, selling like the hair out of my armpits. I'd be selling everything I could. You name it. I wiped my ass today. Who wants it? $100. Yeah, no kidding, huh? Yeah, Wolf Richter talked about it like they like separate. You can kind of see that that's where the money's being spent. Online services, porn. I'm not of that generation, so I'm not used to. I would feel weird talking to a woman on the internet or like internet sex or something like that. I've never paid for sex. I have had friends that have paid. I was in the army, so I would see like married men frequently trying to hook up with paid sex workers, and it was never for me. But I would like if I couldn't pick a woman up or couldn't have sex, I would pay. But I wouldn't. I don't know that I'd pay for an OnlyFans girl. I'd probably just I'd rent an escort or something. But I've never done that. I always like to meet people, so I think it's easier to meet. You know, you can meet women anywhere. Women are easy to meet. And my view, they are. Especially doing normal shit. If you're not looking to pick up, if you're not looking to pick up a woman, it's very easy to pick up a woman. If you're just out doing something where women are, like you're interested in, it's very easy to meet women. But it's not like that for everybody, right? Some people have, maybe they're introverts or I don't know, overweight or something, or something that doesn't immediately appeal. Immediately, I mean. I don't think it matters if you're overweight or if you're ugly or something. If a woman meets you, it's easy. Women like nice guys. I don't think good looking means a lot. If you get to meet and speak to a woman, women really care about who you are, what you're doing, that you have your own interests and shit like that. If you have fun and you're not having fun trying to pick a woman up, that's the easy way to get laid. If you want to know the truth, you're a guy out there. You want to get laid, you just go out in public and do some shit, and whatever you're interested in doing, and you will attract women. As a matter of fact, the less attention you pay to them if they're there, the more attractive you will become to them. In my experience, at least when I was younger. Even as an older guy, I'm married, so I don't think about women a lot. But I have single friends, and I'll go out with them to have a good time doing something. And I get hit on a lot, not a lot, but every time usually. But that's only because I'm not interested in fucking women. I got a woman. You know what I mean? Like, I'm not fucking trying to pick a woman up. I think guys try too hard. That's what I noticed. They're like on the hunt or the prowl, alpha male. I'm gonna find me a woman. That shit. Maybe it does work. I don't know if that works or not. But I never felt like when I was younger, I would try like look for girls and stuff when I was really young. That never worked for me. It always worked better when I was just off doing whatever I like doing. I don't know. I don't know what you guys like on the hunt or something. Yeah, that's all weird shit. Like gym bros, exactly. Like guys go to the gym trying to pick up women. It's like, or pickup artists, that kind of stuff's creepy, weird. I've had like people try to pick up my wife like actively, and I'll just turn and be like, "Hey man, that's my wife." We don't wear rings, by the way. Like we don't actively. We have rings and stuff. We don't wear them publicly. We live in Detroit. I don't want to get shot for a ring in my hand. I wear them stuff out at special occasions, but I don't wear a ring. Neither does she, and we keep in safes. And sometimes people try to pick her up like actively, and I'll just like be in the vicinity, and I'll be like, "Hey man, you can take her home. You can have the kids, debt, the bills, you have it all right now. Can you take care of her? I don't want to pay any child support. I don't want to pay any alimony. You can have her right now for free." Usually they turn around and walk away most of the time. Guys use the sauna in Finland. I just don't know why they think it's the same here. I'm that guy. I'm guilty of that shit. I was in the Olaf. I was in the army, man. Like when I was younger, when I was like, I played sports all through grade school and high school, and I was like, I'm never taking a shower naked in front of other men. And then when I joined the army, fucking 165 swinging dicks in front of you, naked, buck naked, gross, gross. Talk like dirty, nasty, nasty. Like first time I went through a shower in the army, right? It was like a stanchion with shower heads on it all around it. And so the first time we go in to take a shower, we make it a mess, like destroyed it. They bring us back in there. We cleaned that fucking place up. It was so gross. Oh. They got us out of bed middle of the night. You know, get the fire guard, wake us all up, make us go in there and clean all fucking night long, no sleep, smoke our asses the next morning. We go back in that shower the second time. And the second time we got in the shower, they turned the shower heads on. One hot, one cold, one hot, one cold, one hot, one cold. I shit you not. And they made us fucking run around and buck naked. Cold, hot, cold, hot, cold, hot, cold. Out of the fucking bathroom. Fucking. That's real. That really happened. But I saw so much dick in the army that now, now my friends, like I'm an old man now. Like I'll walk around naked in front of anybody. I don't give a fuck. Like I have no, like, you can't see me naked. Like I go to like the gym or something, the athletic club. I'm just walking around like the old guy walking around with my cock hanging out. Go inside the sauna. But I think I've just turned into the I don't give a fuck phase of my life. Yeah. Dicks, yeah. It was the army that did it to me. The fucking army, like, they'd make you change out in the middle of nowhere, right? Like, so, like, you like to wipe your balls and you gotta change your socks and shit. And what? So they, like, you got a towel, right? You can't always take a shower and shit. So you start with your eyes and your nose and your mouth. You do your face. You do like any of your skin that you can do, right? And then you start doing like your fucking armpits and your balls and your feet and shit like that. And by the time you're done with that fucking rag, and you're doing this shit in front of other guys, right? In the middle of fucking nowhere, just scrubbing your goddamn balls. Fucking Christ. There's no shame in the army. The army was disgusting. That's me. That's me, loose skin and old balls. Canceling your subscription now. Anybody else in the military see that shit? Like, I was in the military. I learned all kinds of shit about being naked. Bunch of dudes doing it with each other. Just kidding. That's only sailors, man. But it was different. It changed my world. Oh, you know what else? I don't wear underwear. I wear underwear. I shouldn't say I don't. I will wear underwear if I know I need to wear underwear, but I got that from the army. Like, I'll wear a pair of jeans with no underwear. That's true. That's all from the army. Like, bad habits picked up from the army. Like, I was in the army, they give you these, like, shitty underwear, and they, like, cut into your legs, and you're, like, getting, like, fucking, getting, like, rashes and shit, and they don't fit, and, like, they're, like, the elastics really suck really bad, and they get really loose. So I stopped wearing underwear in the army. No one was wearing underwear, so... Not financial advice, by the way. Yeah, chafing turned my thighs into leather. He was like, is he talking about not wearing underwear right now? No, like I'll wear like pants and shorts and shit, but I'll intend, like, not unless I'm going somewhere. I'm like, I gotta have underwear on. You never know what might happen. I'm going to the doctor today. I gotta wear underwear. The nurse doesn't want to see my balls. Opens chat, closes chat. Trying to think of the shit that the Army taught me. The Army taught me all kinds of fucking stupid stuff. Like, they just like, Army's a weird place. It's bizarre. Things you thought you'd never be or do or not care about ever again. Army. It's the Army every time. Every single time. Every single time, 69% of the time. All right. I'll be back. All right, give me. Well, I'll be back with you guys. Give me a quick break here. I thought I was gonna take a break earlier and I didn't. I was working in the background. You know where the direction we're going in, right? We're trying to break above right now. 59. Right, there's a gamma bar right here, 59.65. It's not huge, but it's significant. And we're trying to get above also a weekly and we did get above. We already got above. Let me just check this here. Make sure I got this right here. We just broke above the weekly R2, and on the daily, that's way up here at 595.99. So that's the target to the upside. You want to see that? Oh, God, so terrible. So fucking terrible. I got all kinds of fucked up stories in the Army. I'll tell you guys sometime. Dude, I watched, oh, God, I got some stories I've never told you. At any rate, keep watching. Give me a quick break, and I'll be back with you guys shortly. It's 11:52 right now. 3 p.m. we get the FOMC rate decision at 3. And then at 3:30 we get Jerome Powell. I will have Jerome Powell live on the show for you. We'll go over a quick refresher on that if you want. If you are a member, I did put out a brief on it last night. All in all, the main expectation is we're getting 25 BPS. Biden say didn't show any kind of rocking the boat. Harris gave a little bit of defiance. Not gonna lie, she shouldn't have, and she did. And but I don't expect. We'll talk about it more when I get back from the break. But if you take a look at that brief, I gave you the left tail problems with FOMC today, if there are any. If there's any like risk, what that would be. Although your baseline should be that we're getting 25 BPS, and he won't rock the boat. He doesn't like to. I'll be back here in just a minute with you guys. Yolanda's mother. Yeah, Jerome's gonna be in the office today. Oh God, sleeping on my rifle. That was fucking terrible. I fucking hated, dude. Like that like your rifle is like, oh, it weighs so much fucking. Oh, I'm so glad. Like your helmet. Like I have neck problems today from wearing a helmet. I got neck problems from wearing a helmet. Sucks for long periods of time, extended periods of time. I forget what they used to call that stuff. They had like a like body armor. They used to have like a neck thing, and then like a back ear neck thing. Like depending on what you're doing, if you're in a Humvee, you'd have to wear like this fucked up like up armor shit, and like I forget what we call it. It's like cross your balls. It sucked. Anyways, I'll be back with you guys in a minute. Yeah, we probably have one more thing to discuss here. We're gonna, if we have time today, we're gonna discuss, if we can, we're gonna discuss Trump talk versus actual expectations. Like S&P Global is saying tariffs could increase U.S. inflation and drag on growth. No shit. But S&P Global is saying Trump is unlikely to impose a 10% blanket tariff and 60% tariff on Chinese goods. I'm surprised they're not addressing Mexican goods either. There's another argument coming out that if you look at Trump's on the record versus what he actually does, that you may not see everything that he's threatened. Well, we'll talk more about it later. That's right. Can't stop, won't stop, Juan. I remember that. I remember can't stop, won't stop. That's old school, bro. Take a note that this looks like somewhat top of the key.
So we're shortly expecting the Freddie Mac mortgage rates for the week.
This could be it, fellas, ladies. Not it, but there's not a lot left up there. There's some more up there. There's a little bit more hiding in there. Oh, there. There's some more up here.
So the US 30-year fixed rate mortgage is at 6.79% for the November 7th week. That's the highest since July 11th of 2024, which is up from the 6.72% the prior week as well.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Now in America, the president, the Senate,
EC President von der Leyen says, I had an excellent phone call with Trump. I'm looking forward to strengthening EU and US ties.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
EC President von der Leyen says, I discussed defense in Ukraine, trade and energy in the phone call with Trump.
just a note right now, if you're listening in, I had an economic calendar that said that the FOMC was at 3 p.m. and 3:30 today, which is unusual. It's normally 2 and 2:30 p.m. That I'm reading from the Fed site saying it's 2:30 p.m. So be ready for 2 o'clock today, 2 p.m.
So Axios, quoting a Biden administration official, says, "We are concerned about Israel Defense Minister Gallant's dismissal because he is a reliable partner in the Gaza and Lebanon wars.
According to CNN, Trump is likely to allow Fed Chair Powell to serve the remainder of his term.
Do you want to stay up to date with the latest and be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Oil futures rise.
Just a note to you out there that I don't, if you're in the market, or if you're in the if you're a member here, I had a bunch of from down like it was like 570, between like 570 572. I had a bunch of January call spreads. I just sold them. I'm out. If you don't know, if you're not in the Discord right now, I just want you to know that I'm out. Still have ratios on. I had a bunch of ratios on. They're not printing shit right now. I either need to be much higher, like 620. 610, 620 to close those bad boys out, or I need a bloodbath like doom and gloom. I am looking to get back into those call spreads again on a pullback. If I can get a pullback or a sideways and down over the next week or two, I still think we can trade 600 right now. But I got the premium kick. I wasn't buying in the money stuff. It was all priced in. There's too much premium on the spreads. So I was trying to capture the upside, or I was trying to capture premium in the call. I used like a debit spread as kind of a credit spread. But I didn't want to get caught in a downside move and a credit spread and get or have it taken away from me. So it was kind of like a debit spread to capture premium trade. At any rate. So I just want you to know that I'm out. I still have a ratio on right now. I sold right at 1 o'clock, so just a heads up there. What else I have for you guys? Also, just want to say one more time, the calendar that I have had the FOMC at 3 p.m. and 3:30. I thought it was because maybe the election, and then I'm looking elsewhere, and it's actually 2 and 2:30. So we will be ready for the FOMC at 2 p.m. Just note though that you should see hedging. It's 2 p.m. over here. Here's 1:30. We could get it like a squeeze higher. But just note that as we come into FOMC, let's do a little FOMC primer right now. It's how you make money in this market, right, Tazo? This is one of the best ways I make money in this market is spreads, like consistent. The best way I make money is buying the fucking S&P. I'm not long the S&P 500 right now. I'm not going to tell you that I am. I'm missing this. Right? No, hold on. Get rid of that. I'm missing a lot of money right now. I'm not mad about it because I made a lot of money too, but hold on. When I trade zero dates and stuff, I will turn, if I'm losing the trade, I'll buy the S&P 500 rather than closing them out, and then I sell options against them, of course, in a bull market. But I took the money and ran, owning the stock market. I still have some tax loss stuff that I didn't do. Tax loss harvesting on. I got some stocks kicking around, but it's nothing major. So I'm in a lot of spreads right now. Like I have exposure in the market, but I'm not like I got the exposure for the I have the exposure for these moves basically, and the vol, realized or unrealized. Matter of fact, I was reading a white paper. I was talking about how everyone was hedged for this volatility into the election, and most of the market was. You can't say like market's not going to like retailers are all out. Hedge funds haven't been in since January. They need to get long right now, believe it or not. They're getting long right now. I should say that too. But at any rate, we'll talk more about that later. At any rate,
Zelensky says part of the 11,000 North Korean troops
Voice news disconnected.
turn that shit off. We're at the FOMC. So we're coming into the FOMC meeting. I'm going to give you guys a quick primer, okay? 1 p.m., we've got the half an hour before. And then we've got the 2 p.m., you'll get the data drop, right? You'll get the actual press release from the FOMC. At 2:30, we will have the press conference. Okay? Now, what I want to tell you about this is we're trading up into this FOMC. Oh, nice. So a little bit of risk off action as we get into the FOMC meeting. Now, in last night's brief, I'm going to read to you last night's brief. How about that? I'll do that. Now, the expectation today, there's a couple things being told to you today. You're being a little bit rug pulled right now, and you're also being told some bullshit. Like S&P Global is telling you that Trump's not going to do tariffs. Trump's not going to fucking do this. He's not going to do that, and blah, blah, blah. Dude, did I just sell at the right goddamn tick? Son of a bitch. Oh, my fucking God. I told the Discord, too. I gave him warning before he even did it. So, I'm gonna give you a primer right now from the BBG, but then I'm gonna give you my brief that I gave you last time. I'm gonna read some of it to you. Now you should be going into this as saying we're gonna get 25 BPS. You're gonna get a Fed chair that's not going to be rocking the boat. I didn't like Jamie Dimon coming out and saying we're not going to be a part of the Trump transition. That's kind of like right before an FOMC meeting. There's already questions about what Jerome is going to be, what his part is going to be in the transition. That raises some bigger things, which is raises a bunch bigger questions because. If you have your Main Street hat on, you're told that Trump's going to fix the economy. That might be true, but not without pain. And some of the shit that they've said is dangerous to our stock market and our economy. And you got to remember that we were on the fix the COVID shit, right? Fix the COVID trade, right? Bring everything back in line. Don't overshoot. And if we're going to move into a different economic policy than that, that could be disruptive. Now, does he actually do all this stuff that he threatens? Historically, no. But there is left tail risk there that needs to be priced in. And right now we're heading into an FOMC meeting where if we have a shift in Fed policy, Treasury policy, economic activity from the White House, the Senate, the House of Reps. That's big stuff. They're not going to tell you that publicly. Now, I posted some about CTAs for you in that inside the Discord that they're no longer buyers. It doesn't mean that we're going to sell the market or anything. It just means that they've bought, and they're not going to buy unless we get above 6,000. Gamma. We need to develop some upside gamma right now. But dealers aren't going to give you, like, if you're buying 6,100 calls, the dealer's going to put the money on the calls, right? So let's say a call to 6,100 or 62 or 6,300 is worth $1, and we're trading 570. When we come up here and trade 595, dealers are already at it, or at some point they kick a premium onto that option. So they're already ahead of you. So you go and scoop up the 6,100s, and they're kind of valuable, becoming valuable, right? They want to dump the price, get you down, so what you just bought is less, and you convince other people to buy more calls, right? A bag, empty bag, full bag, bag holder. So they're not just going to give you money. They're not going to bankrupt themselves. You're not going to sit here and buy 595s that are $20, and they're going to give you $60 on it, right? Like nobody's buying 600s, nobody's buying 61s. You get what I'm saying? I don't know if, theoretically, I should go into more detail on this later, but at any rate. So I think we can go to 6,000. I think we can go there today. I'm not opposed to that. I'm not opposed to us trading 595, 6,000. I'm not opposed to us trading. This is the SPX Gamma trading like 59.75. But we're close to a top here. Like that's pretty goddamn close right there, isn't it? And you know, the top right now, the market is the call wall is basically 6. The call wall right now, where's that? There it is. Call wall right now is 6,000. So mechanically, we're just trying to get people to buy 61, 62, not actually trade that right now. Will we trade it? Yes. So we will trade it. So we're going to go there. Eventually, we're going to go there. But not before they fucking destroy all those calls, right? We can get close to it and they'll reject it. So at any rate, you kind of get the gist here. So on the preview for today, FOMC preview, I'm going to read some stuff to you here, okay? After the historic election, which has once again made a mockery of the polling profession. Am I in the right place here? Hold on here. Hold on. Hold on 1 second here. This isn't mine, by the way. Hold on. Give me a second. God damn it. Main screen. We'll go to the main screen here. Here you go. 2 p.m. Some hedging coming in, some risk coming off the market. Not to be unexpected. We can still go higher. Just risk coming off the market into a volatile event. Doesn't mean get short. Doesn't mean like doom and gloom. Any of that. We're going to talk about that, though, at some point. I am personally looking at this point to get long, but not long today. I'm trying to get like long. If we can trade sideways or slightly down, or we get a surprise from the Fed and they blood it, I would love to fucking put some call spreads on again for a holiday rally. We're getting long. The holiday rally starts today. So, you know, all that money flow comes in, slows down, dealers stop chasing, push it down a little bit. Then you get long, right? Put a call spread on for Christmas, for Hanukkah, for Festivus, for whatever the fuck it is you celebrate. So that's what I'm looking for. And there's probably more people out there looking for that too. Today, tomorrow, we don't have a lot of volatility left. We only got a few more events. We got FOMC. We got a few more things in the next couple weeks. But we should start ramping here soon. So if I can jump in here and I can get a little bit of volatility to get long again, I will. So that's where I'm at right now on this stuff. So FOMC preview for today. Wall Street consensus expects that the Fed is widely expected to continue with its easing cycle in November, with all analysts expecting the Fed to cut by 25 BPS. In fitting with money markets pricing in a 25 BPS rate cut with a 99.8% certainty. This would take the target for the FFR to 4.5 to 4.75, or roughly in line with the 10-year is about to trade in a few days. The statement will focus on the language the Fed uses to describe the economy with risks now roughly in balance, and to gauge any future rate guidance. There will be a lot of attention on commentary from the Fed Chair Powell in the presser to see how the Fed expects expects Trump to influence the economy and the outlook. So do you see where the vol comes from? People want to fucking know what's going to happen, or something, a hint, anything. Powell is likely to maintain optionality when it comes to the future rate guidance by stressing optionality, stressing a data-dependent, meeting-by-meeting approach. That is, hey, If he changes his shit to like, we're data dependent, that's fine, right? But if he changes his shit to, hey, we're data dependent, but if we get an economic policy change, we told you before that the rate hike cycle was finished. We are actually open to it being more rate hikes. That shit's not priced in. Get what I'm saying? It's like you get 25 BPS or you get none, and we're data dependent. Good. If he comes out and says something like, we're on this economic policy of clawing our way back from velocity and data points, and we're making good progress. But if economic policy changes and we see inflation ahead, and we might need to backpedal into a rate hike regime, some shit like that, that's bad. So anyways, Powell is likely to maintain optionality when it comes to future rate guidance by stressing a data-dependent meeting-by-meeting approach. In September presser, the Fed chair said, we can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. Any explicit signal to one of these options as a preference would be a key development, right? A key development. Election implications. The FOMC policy announcement is today, rather than the usual Thursday, given the presidential election on November 5th. Since many people believe that Trump's proposed policies, including higher import tariffs and additional tax cuts, could reignite inflationary pressures, and most think these would be more inflationary than Harris's policies, the dynamics of Trump's victory could severely hinder expectations of the Fed's easing trajectory. Nonetheless, the election shouldn't have too much of an impact on this meeting, especially since the apolitical Fed would then be viewed as responding to political pressure. But it will likely shape future rate cut expectations, particularly in 2025. Of note, since the Fed's first cycle rate cut in September, 10-year yields are up a staggering 80 BPS, and there's velocity in that, which strongly hints that the markets believe that the Fed is making another policy error, sparking reflation by easing. So, you can see the data is showing that Fed's future fund rate is telling you you're not getting rate cuts next year. They're already telling you this. They're telegraphing this to you right now to start cutting your rate cut expectations next year and even this year, but more so even next year. Not even until 2026, especially if the economy runs hot and we don't crash. Does that make sense? So you are looking today for, you don't want to hear from the Fed today, like the Fed said specifically, we are wrapping up our rate increase regime, however they worded it. You don't want to hear like that's still on the fucking table. Like if he emphasizes that is Wall Street will get spooked. Now, for me, we could moon today, but if there's any of that shit, they're gonna sell this. They're gonna sell like a hot potato because it's not priced in, or the Fed. We haven't priced that in with the Fed yet. So that's only something that is short term. So if there's an opportunity here for me to get long on the hourly trigger or the daily trigger, I will, because I still think we're going to go higher. You don't want to ever hear, of course, the Fed saying we're going to start aggressively cutting. You don't want to hear the Fed say we're raising rates today or anything like that. You want the steady as she goes is what you're looking for from the Fed. And you should be aware of any policy or Fed speak changes today that could be tied to the election outcome. You guys don't have to believe me. I swear, I'm going to tell you something. If you're watching the show, right, and you're a fucking Trump supporter, I always say, have a Main Street hat, and then have a Wall Street hat. Put your Main Street hat on, shit post on Twitter about this and that, or wherever, fucking Reddit, wherever the fuck it is you do your thing. And then take that goddamn hat off the moment you start dealing with the stock market. Because Wall Street has two mouths. They got two mouths going all the time. One mouth is their political beliefs, and the second mouth is the reality in the background. And Wall Street's afraid. 8 fucking trillion, not 4 trillion. Both spenders. The deficit, right? We're not cutting the deficit. Like, we're going to crank the deficit. We're going to run this fucker hot, and it could break as we do it, too. But, you know, if that's what we're going to do, that's what we're going to do. Now, there's a third, there's option C here, where that's like Trump talks a big fucking game. I'm going to be honest with you guys right now, okay? There's a third conversation going on right now on the side on Wall Street. And this is like, Wall Street pros are like, you got like, I don't know, I love Trump. That's the Main Street hat, right? It's a very rough. There's some. You ever meet these guys and shit? Some of the talk is like kind of like it would make a Democrat angry, a liberal very angry. But then you get the second hat. That's the Wall Street hat, and they have to protect that left tail risk. Then you have option C, and that's where like you got a Wall Streeter, and he's like, we got to protect against that. But option C is this fucking guy is greedy. This is not the Wall Street. This is not the Main Street yet. This fucking guy is here to make deals. This guy's here to make fucking money. This guy's here to create a dynasty for his kids. This fucking guy could give a flying fuck about your economy and your fucking resetting this and resetting that and fucking, I don't know, creating this new fucking this and whatever fuck it is been promising these Republicans. Greed. It's the greed trade. And the greed trade is like option C, where he says he's going to fucking, I don't know, 50, 80% tariffs on Mexico, 60% tariffs on fucking China, blanket across everybody. He's going to, Elon telling you he's going to fucking reset this and clear out $2 trillion in debt, all that bullshit. And they don't really care about that. Trump isn't that fucking guy in real life. The fucking guy is greedy. And fuck all of you out there is pretty much how he is. I'm serious. This fucking guy is about money. And that is the third conversation that goes on, which is, you know, rape, pillage, and steal. I'm serious. And Wall Street loves that shit. Like if you're a trader, right? Like you get your Main Street hat off. It's fucking ruthless. It's all about fucking money. Making fucking money, making profit, greed. And if you don't believe or know that, I'm here to tell you that. And, you know, Trump is kind of that guy. So, like, you say things, yeah, he wants power and money. So he'll say whatever the fuck he needs to say to Christians. He'll say whatever the fuck he needs to say to some kid that thinks he can't buy a house. He'll say whatever the fuck it is you want to hear. He doesn't give a fuck. Whatever you want to hear, he'll tell you. And then there's the reality. Behind the closed door, in the C-suite, and these fucking people are monsters. It's all about fucking money, power, greed. Now, that could be true. If you were to go back and look at Trump's first 4 years and what he promised and what he delivered, two different things. You know, I made a fucking deal with this shitbox COVID fucking. I met the guy that owns this COVID drug company. It's got 3 employees. It's publicly listed. It's trading $3 fucking. I own 1 million shares. I'm gonna make a deal with this guy at a press conference, and I'm gonna shit on Pfizer while I do it. Literally. You got it. I'm not trying to say Dems don't do it. They all do it. They all fucking do it. Every fucking one of them. I ain't shitting on Trump and I ain't shitting on Republicans. They all fucking do it. I said C-suite. It's all these fucking guys. You know? And some do it worse than others. And like the first Trump presidency, my wife hated me because I'm like, I don't like Trump. But I fucking love him when I'm trading the stock market. I fucking love him. That man made me more fucking money than anything ever. Made me stacks of money. Like my wife's like, how do you resolve that? And I'm like, because that's who I am. Like, I can be wrong, I can be right. Like this market trading, you're right, you're wrong. If you don't have thick skin and can't be wrong, this isn't for you. If you can't put some of your values to the side, this is not for you. You can have some values, but that is not what the fucking stock market is. You're in the wrong fucking business. You want to be true to somebody? Go become a fucking carpenter. Go fucking build a house. But this is not what that. But you will get smoked. Smoked. You'll be broke if you think that is what the stock market is. So you got to differentiate them all. Put your stock market hat on. Leave your fucking values hat and your politics and your religion and all the other bullshit you believe in your regular life. You leave that to Main Street. If you think I'm fucking lying, right, I'm going to tell you the truth here. If you think there we go. If you think I'm fucking lying, right, you go tell somebody out there that's on Main Street that you short the market. They think you're a fucking scum. You're a fucking part of the problem. Tell them you're a stock trader. They're going to think you're scum. These people work normal jobs. They break their dicks their whole life. They put their money into a fucking fund, a 401k. We have a big stock market crash on speculation. They don't like you. They group you in with those people. I'm telling you. So don't be like, I got values. That's not real. No one likes you. You guys not know that? Greatest job in the world. But don't believe for a minute that you're a stock market participant and Bob and Mary that owns a landscaping company likes you. Tell them you lost 50 grand this week and 150 grand you made the next week. They're going to think you're crazy and they're going to think you're a scab. You know what I mean? Like they want to put their money in a 401k. They want a 20% return over 20 fucking years. They don't want to hear that you're short selling the company they're in. It's a good company. They don't care about you. They think you're a fucking scab as they think you are. Pariah. That's right. Money. We're here for money. So, some of you got there like, I hate that guy. But my point here is this. There's a little bit of bleeding going on right now. Blood in the marketplace. Somebody get the CNBC graphics up. Traders brace for FOMC decision. At any rate, you know, and what I'm reading to you right now, guess who that comes from? What I'm reading to you, that's not my brief. That comes from pros. The pros are telling you. Not you regurgitating, I'm a Democrat on Twitter or on Reddit. This is shit written by pros. Because I hate that guy. He doesn't think the Democrats do that. No, I'm telling you from the perspective of Wall Street. This is what they think. So I'm going to continue on now. According to Bank of America, while Powell is likely to get questions about the election, he is most likely to highlight that the Fed will stay in its lane and react to incoming data. Jerome is not known to rock the boat. Instead of commenting on the next administration's policy agenda. That said, the bank writes that the elections will have far greater consequences for the path of Fed policy than anything Chair Powell says in his press conference. All else equal, further fiscal expansion means a higher terminal Fed funds rate. Rates. Analysts expect the Fed will continue its easing cycle with a 25 BPS rate cut in November to 4.5 to 4.75. Looking ahead, 90% of analysts surveyed by Reuters see the central bank cutting another 25 in December. Money markets are currently pricing in around 43 BPS of rate cuts through the end of the year, which is down as of the election to 43, suggesting that at least one 25 BPS rate reduction with an 80% probability of another. Since the Fed began its cutting cycle in September with a bumper 50 BPS reduction, which was intended to stop the velocity of some of the data that's been coming out. We had data that was going moonshotting or straight down during COVID, and then we turned it all around with our rate hiking regime and the Treasury tightening regime, and then they all came down or back up with velocity, and they slammed us with a 50 BPS cut, to slow the velocity of these data points. Hold on here. Give me a second. I'm going to lose my fucking voice here in a couple seconds. Economic data has generally pointed to a resilient economy, although inflation is still just above the target, and the latest jobs report was soft, but influenced by hurricanes and strikes. Through next year, 80% of the 96 economists polled by Reuters see the Fed funds rate target falling to 3%, 3.25%, or higher by the end of next year. More than 80% said risks were that rates would or could likely be higher than currently expected. The poll noted after the election. So you are looking for that. You are looking for any signs that they're going to switch from, hey, the tightening cycle is over, which they told you, to, you know what, we might be open to some more tightening now. You don't want to hear that shit today at all. Money markets are pricing rates to fall to 3.5, 3.75 by the end of 25. This would still be considered restrictive, given that the Fed currently estimates the neutral rate is around 2.9%, kind of in line with inflation, or coming into line with inflation. But if we're looking forward and saying, yeah, inflation should be at 2% next summer, buddy, by July, right? We're saying that before the election. Now we're going, hey, you know what? Maybe not. Maybe inflation's going to start fucking pumping, right? March, July, June, start doing all this crazy shit. Trump actually is a man of his word. He's bringing Elon Musk on board, bringing RFK, bringing some heavy hitters. I forget that other guy. I know the guy with the skinny face, tan skin, close cropped hair. Looks like Goebbels or something. That guy, I guess, said, that guy is saying all kinds of crazy shit, right? Guy said that if you're a first generation naturalized Mexican citizen, you're on the list to get deported too, right? Like became naturalized, your parents were illegal because you were born here or some shit like that. Like, that guy's creepy. That guy's like, we're gonna actually do what we promised to do in the first term. So if that comes to light, we might get some inflation. Next thing. Recent data. The October CPI report on net was hotter than forecast, while the PPI was more mixed. But that left the core PCE, the Fed's preferred gauge for inflation, more in line with expectations. Remember something about data points. One report does not make a trend. You want at least 3 to get a data point, okay? At least 3, sometimes more, to get an actual. So you get a slightly hot, slightly cool read. Doesn't really tell you where the market's going. You need like multiple datas. 3 months, 6 months. Good to see the actual direction of the market and the rates that or the data points you're looking for. The jobs report since September FOMC have been mixed. The September report was notably hotter than expected and saw markets start to unwind the probability of another 50 BPS rate cut after the Fed's 50 BPS cut in September. However, the October report was very soft with chunky downward 2-month net revisions. The 12,000 job additions in October was concerning, although largely impacted by hurricanes and strikes. But the BLS noted it was not possible to quantify the exact impact of such an event. It did stress, however, that Hurricane Milton did hit during the survey period, and the collection rate was well below average in the establishment survey, which is the NFP, while the household survey unemployment rate saw no discernible effect. Note that the unemployment rate was unchanged at 4.1% versus the year-end Fed median projection of 4.4%. And analysts at Citi highlight that the report was still softer than expected after correcting for the hurricane and strike effects, with core PCE running close to target and the ECI slowing to 3.2% annualized. Suggests to them that the Fed Chair Powell will avoid a hawkish stance and continue to signal that the Fed will take rates to neutral. But he may also keep options open by signaling either a slowing or acceleration of the pace of cuts. Whew. The press conference. Powell recognized strength in third quarter GDP growth and payrolls, putting less emphasis on slowing than he did at the last meeting. The strength in growth gives the Fed patience as it allows policy easing to be gradual. Neither inflation nor unemployment is forcing the Fed's hand. Powell is not expected to give specific guidance on the size or cadence of future cuts, especially now that Trump is president-elect, and the shape of his policies will have a dramatic impact on the U.S. economy and monetary policy. policy remains data dependent, and neither the September 50 BPS cut nor the November 25 BPS cut indicates the future pace. Whew. Now, recent Fed speak. Fed Chair Powell has guided the markets to a 25 BPS rate cut in November and a 25 cut in December, providing the economy evolves as expected. This is in fitting with the latest summary of economic projections, which has the median year-end rate at 4.50. However, the SEPs released in September were very mixed, with 9 penciling in rates above the median, 2 penciled in no further cuts this year, with 7 penciling in just one more cut. 9 matched the median, while one member saw rates at 4 and 4.25 by year-end, 75 BPS lower than current levels. The Fed speakers have primarily opted to leave options open, and that decisions will be made on a meeting-by-meeting basis. One of the more interesting comments came from 2024 voter Bostic, who said in October, after the hot September CPI data, that he is totally comfortable with skipping a meeting if the data suggests that is appropriate. So that is the tail risk, right? The left tail risk today is we don't cut. It implies that we're expecting inflation in the future. Skip a cut. Now, Bostic's a hawk too, right? That guy's always looking to shit on your parade and your party as a bull. But you should be looking closely today, listening closely to the Fed, to Jerome Powell, and that would be the shit on the parade, right? Any kind of change in Fed speak, any expansion on data dependent, like data dependent, great. Everything looks good. Economies should be the same now into December. Shouldn't be any changes. If they bring up any kind of craziness like, but next year we're altering, right? Or we expected 2% by July, and now we're might be open to raising rates if required. Any expansion, any of that stuff, be wary of it. Also note, the 10-year starts to head over 5, right? On the 10-year, start to be sketched out a little bit to at least a sideways trade in case those yields don't come down. Sideways and slightly down trade, especially in smalls. Small caps should see more pain than S&P. S&P would travel sideways and down slightly. Smalls could take a hit. What else? Expected move. You're likely going to. I don't have a reaction function in front of me, but I'm going to give you one of my own. Okay. We're going to trade to the upside. If we get a good Powell thing, the Powell thing, you should be expecting to trade 6,000. Okay, that's up here. On mega uber bullish Powell. Although I would probably rein it in. I don't think we're going to trade that today. I think probably going to trade that 590, 595, 99, somewhere up in here. Hold on here. Make sure I got that right. Okay. Give you a couple targets here. There's 600. To the high side, I doubt you get there. They'll also some points about these things. You'll see dealers will sell into strength. You'll get a couple different moves. You get initial down move, then you get your up move. They fail to hit your actual target. They rein it back in. They start to crush volatility, which there isn't any right now. And they maybe save 6,000 for tomorrow or Friday if it's a good Fed meeting today. Downside targets for today. You've got good old 5950. That was the start of this morning's move. You've got 591.94. The half-an-hour trigger should be up here at this 59.50. And then right down here, the pivot point is at 589.50. So downside expected move today. If you want a downside expected move, somewhere down in here, and possibly right down in there. Can we blood even below that? Yeah, you get like a bomb dropped on the market. we will trade the daily trigger, and that is way, way down here. 578, 580 by Friday close. Right down here, 580, 578, big green bars right here, big yellow thing right bad down here. It's 575, somewhere down there. If you're expecting like a shit show, by Friday, you'd be down there. Easy. Easy. We'll close that fucking gap like nobody's business. I don't think we close that gap though. I think like if you wanted like a real doomed trade, be targeting like 589, 590. Right, somewhere right in here. Right in here, like 590, 598, something like that. If that's what you're looking for. If you want what I think is going to happen today, I think it's going to be positive. I think it's going to be positive. JPOW's not that guy, man. I'm hoping for that. I'm hoping for like the doom straight down so that I can get long again. That's me. That's what I want. So I want a breather. I want to be able to get back in again. So I want it to go down. But you figure with Gamma, they squeeze it up. Everyone's buying fucking calls. Everybody's like, woo! And then we roll it down afterwards. So we go up there and we ping that 6,000. Powell may retire. Yes, there is some risk there. We've discussed that too, right? There is some risk of a Powell possibly exiting. And you know what? I don't think it would be because he dislikes Trump. I think it would be more that I think if you see a Powell exit, it would be more if we change our economic policy. This would be a moment. Hey, I did my job, right? Like you go from job to job to job in the Fed, different economic conditions. I think if Trump had said we're going to continue on this economic path, I don't know, until it's done, I think Jerome would stay on most assuredly. I think if I was Jerome or you were Jerome and you had a private phone call with Trump and he's like, hey, I think you're done. You've done this. Do you want to step aside or do you want to come down? Do you want to stay on the next path that we're going on? We're going to change our economic policy. Do you want to stay on for however long that takes? So, hey, I'm Trump. Hey, Jerome, we're going to change economic policy. We're going to do this whole thing where we clean out the U.S. bureaucracy. We're going to run some tariffs. We're gonna do this and we're going to do that. Do you want to stay on for that? Well, how long is it going to take? 8 years, 4 years, 2 years, 10 years? Does that make sense? That's normal and rational. That's how people work. That's how people take these positions that they're appointed to. So I'd say that that's up in the air right now. I don't think it's anything like fuck Trump or I don't know. I don't think that matters. I think it's more of do we continue? I'm like finishing up a job here. Is it done? Is it not done? And that's about it. Yeah, you can't blame them. You can't blame them because these guys get appointed by presidents, and some of these presidents continue on. Some of these presidents don't. How long has JPOW served for? That's a long time, right? The fucking guy's getting old too, right? You guys noticed it, right? When did he first join? 2018, right? Was it 18 or was it before? Oh, he was chairman, board of governors from 2000 or governor, board of governors, 2012 to 2018, right? So he served from 2012 to 2018. We're in 2024, right? So that's a long time, right? Yeah, pretty decent time. And then as the chairman, he's been here since 2018. We're in 24, 6 years. I could see him do another 4. I could see him stay on another 4 maybe, but that's still a length of time, right? You've got 6 years, another 6 years in for 12 right now. So 12 years is pretty decent. How often? Let's look it up. Hold on. How long do Fed chairs keep position? I know it's 4-year term. Set to expire in 2026. So another year, another 2 years. So let me read this to you. When did this come out here? I want to read this to you. President-elect Donald Trump is likely to allow Fed Chair JPOW to serve out the remainder of his term, which expires in May of 2026, according to a senior advisor to Trump, who requested anonymity to describe private conversations. The advisor cautioned that Trump could always change his mind, but his present view and that of Trump's economic team is that Powell should remain atop the central bank as it pursues its policy of cutting interest rates. Trump appointed Powell, a Republican former private equity exec who served in the central bank's governing board, to its top spot in 2018. But note, he's been there since 2012. Joe Biden reappointed him to a second 4-year term. Gary Cohn, GS alum who served as economic policy director during Trump's first administration, is said to want the job. But former Trump officials have said that the fact that Cohen resigned in protest over Trump's steel tariffs makes it highly unlikely he gets it. I think we all like JPOW, don't we? I think everybody loves him. I hope he stays on until 2026. Among the names mentioned by sources in touch with the Trump transition are Kevin Warsh, who served for 5 years in the bank's board of governors and advised Trump during his first term, as well as Trump's former chief economist, Kevin Hassett. In July, before Trump was elected, the Fed chair was asked whether he intended to serve out the remainder of his term, and he said, "You ready for this? Listen to this closely." In July, before Trump was elected, the Fed chair was asked whether he intended to serve out the remainder of his term, and he said unequivocally yes. And Jerome Powell is not that guy. You got to remember something. Like, Jerome Powell is not like he doesn't like to rock the boat. He's like the guy that's like smooth everything out, easy transitions, in, out, in, out. He's just like Biden. He's like Bush. He's a bureaucrat. That's what he does. He doesn't like that kind of shit. He's not there to like shit on anybody's parade. All right, what else we got here? Trump has frequently aired frustrations with Powell and occasionally threatened to remove the Fed chair from his post, which no president has ever done. Let's talk about that. I told you earlier today that if Powell cuts today, you'll probably hear Trump come out and shit on him. If Powell doesn't cut today, Trump will probably come out and shit on him. That doesn't shock me. It's a normal part of their relationship. Historically, like for years, like way back in like 16, 17, they were shitting on, like, Trump loves shitting on the FOMC. Not the just the Fed. He likes to shit on the Fed no matter what their decisions are. So what else we got here? Trump has also criticized what he perceives as a lack of transparency by the Fed, which conducts its policy deliberations in private and releases the notes from those discussions weeks later. Trump has gotten fucked on some of his trades on those, but they don't do that anymore, though. They telegraph in advance. Basically, there's not. Back in the day, they weren't like that. Back in the day, they would come out and shit all over the market. They don't do that shit as much anymore. But Trump has criticized what is perceived as a lack of transparency by the Fed. Fed has noted that they are no longer adversarial anymore. So this kind of does away with that. Trump aides have suggested that he would like real-time release of those minutes and economic reports and for the meetings to be conducted on camera. I doubt you'll ever see that. I doubt you'll ever see. If any of you guys ever read any of the memoirs of Fed chairs or people that have worked for the Fed, it doesn't go like that. That shit ain't ever happening. You'd have the markets like blood in 500 points, up 500 points, down 500 points. And you'd probably still have a private meeting. That's the funny part. Even if you had a public meeting, it would still be orchestrated. It would be like a kabuki theater. They would have had private meetings, then a public meeting. It would have been boring. Trump and Powell clashed several times during the first term, with the president-elect threatening to fire him from the post on several occasions. In 2018, Trump said he was considering replacing Powell with a new Fed chair after the central bank raised interest rates. A president, however, cannot easily remove a Fed chair once confirmed unless they break the law. This is again going back to the 3 trades with Trump, right? You have the Trump is gonna save America trade, and then you got the what Wall Street thinks Trump's gonna try to enact and have to hedge against. Then you got the real reality, right? Trump says a lot of shit, and it's not always accurate, and it's not always ever going to happen. 155. Presser comes out in 5 minutes. I'm going to stop chatting here. You're going to hear somebody speaking in the background.
And inflation for the Fed, and with all the noise from Friday's NFP not impacting the unemployment rates, the December NFP takes on increased importance, meaning if we see the unemployment rate fall below 4% at that December non-farm payrolls read,
I will have that PDF for you in the Discord in just a few moments.
Skip a meeting, possibly a possibility that was raised by Fed's Bostic. So that skip a meeting being in reference to the December meeting, they do see a 25 basis point cut at this meeting, just to clarify.
God, I'm reading the notes from Trump and JPOW. It's so fucking funny. I'm reading all the rehashing from COVID.
That Russia and China's mutual trust is at its peak. China's economy model is very effective.
Yeah. I'm reading. I forgot about some of this shit that happened during COVID, and that CNN did this whole expose on it. I'm gonna fire the chair. You can't. You gonna read some of this shit to you? After markets tanked at the onset of the pandemic in March 2020, Trump told reporters he had the right to remove Powell as chairman, adding that he has so far made a lot of bad decisions, in my opinion. More recently, Trump also said the Fed chair is among the easiest jobs in the government. You show up to the office once a month and you say, let's flip a coin, and everybody talks about you like you're a god. Trump said last month at an event hosted by the Economic Club of Chicago. Trump also said his prior threats to remove Powell were, quote, because he was keeping the rates too high, end quote. Caused the Fed chair to lower rates too much, end quote. While the Fed chair is the most clout at the Fed Open Market Committee meetings, they are not the only official to determine where interest rates should be. At every monetary policy meeting, there are 11 other Fed officials who vote on interest rate moves. Yeah, they do, but Powell's like, you can dissent all you want. You're going my way. Market is exiting right now. You can see it in the you can see it right now in see it right now in the fucking whatever the fuck it's called over here. Sorry. I'm just thinking about all this shit from COVID. This shit's gonna be a disaster. It's gonna be, no, I don't know if it's a disaster. It's gonna be a shit show. I'm gonna change it to the stock market shit show. Oh fuck. I really am going to change it to the stock market shit show. It really is. It's going to be a disaster. All the way down.
Putin and Russia's and China's energy ties are developing
all the way up. I'm going to keep a bottle of Clorox next to my desk. Yeah, I'll talk about Snap.
So 1 minute now till we get the US interest rate decision and the
Trump
FOMC
Ball 2.0.
1 minute.
I was trying to name it in the I was trying to give names to it in the brief last night. China deal on, China deal off. I can't wait. We're We're gonna do 60%. We're gonna do 60% blanket tariffs by tomorrow morning. This is like 4:01 p.m. Fucking 9 fucking 29 a.m. We've canceled the 60% tariffs this morning. I was on the phone with Z while I was on the shitter. Nice, Bark. Nice.
10 seconds.
Somebody should get
somebody should get 25 basis points cut to 4.75% as expected.
25 BPS cut. 25 BPS cut.
Judges risks to employment and inflation goals are roughly in balance. Statement omits references to having gained greater confidence in inflation moving sustainably back to target. The committee judges risks to employment and again are roughly imbalanced with inflation. Market conditions have generally eased. Unemployment rate has moved up but remains low. Inflation has made progress towards 2% but remains somewhat elevated. Fed says they will continue reducing bond holdings at the previously announced pace. Economic activity has continued to expand at a solid pace. Fed adds that labor market conditions have generally eased. Unemployment rate has moved up but remains low. Fed notes that the vote in favor of policy was unanimous.
That's good to see.
So looking to the markets now, some strength in the dollar, whipsawing in the S&P 500 as the Fed reduced rates as expected, and again omits references to having gained greater confidence in inflation moving towards the target.
That's important. Just a note here that the Federal Reserve has changed some of its speak from gaining greater confidence in inflation meeting its 2% target or moving sustainably to its 2% target. They did omit that. TLT pulling back right now, has a hour cross coming up. Ten-year yield spiking right now.
Losses after the Fed rate cuts, 10-year last down 6.7 basis points.
Protect your trades from macro headline risk with Financial Juice Pro. Now only $99 a year for our real-time service.
This TNX down here. We want to see if we can get a roll to the downside in TNX, but I want to see it continue to go higher.
Yield cuts losses after the Fed decision there, and the dollar pairs losses as well after the Fed cuts rates.
Fed changed some of the speak also to inflation has made progress to 2%, but remains somewhat elevated. There is some Fed speak change today, or some kind of a nod to Trump becoming president.
More comments from Russia's Putin, who says that we had to take into account nuclear arsenal of Great Britain and France when discussing strategic nuclear stability.
Thanks, Waterboy, for posting that in the Discord. I'm going to read through it right now.
US Treasury 2 to 10-year curve flattens modestly at 12.8 basis points following the Fed decision. It was previously at around 13.4 basis points.
Are you kidding me? Are they really going to try to do that? SPY bleeding, TNX on the run. TLT trading lower right now, but it does have an hourly trigger just below it. I did just post the press release in the Discord. I'll read it too, again, if you want, here between now and the presser. Recent indicators suggest that economic activity has continued to expand at a solid pace. Since earlier in the year, labor market conditions have generally eased, and the unemployment rate has moved up but remains low. Inflation has made progress toward the committee's 2% objective, but remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee judges that the risks to achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. In support of its goals, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4.5 to 4.75%. In considering additional adjustments to the target range,
US interest rate futures price in another 25 basis points cut in December after the Fed decision, according to SEC data.
Positive. The committee is strongly committed to supporting maximum employment and returning to inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. Data dependent. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. That's noting, of course, the geopolitical overhang. Voting for monetary policy action were, of course, Powell, Williams, Thomas, Barkin, Barr, Bostick, Bowman, Cook, Daly, Hammock, Jefferson, Kugler, and Waller. Overall, not bad. I think maybe just the one thing that there's a couple things in here that I don't know if they're new, but just acknowledging geopolitical risk, slightly acknowledging that they're open to rate hikes, or at least not the rate cutting cycle is over, but nothing dramatic. We have the 2:30 presser at 2:30 with Jerome Powell. We'll have that with you live. Maybe you can vote on what color his tie is. It'd be wild if it was red for the GOP. That'd be kind of a nice touch. So the unemployment rate has actually been pretty good. The rate of change in the unemployment rate was dangerous. It was flashing recession. If you ever go to the Fed's website, look at the options on it, and you can change it to the rate of change. and it was flashing recession next year. And after we got the 50 BPS cut, that did disappear. That recessionary flash is now no longer there. But yes, it was flashing recession prior to the 50 BPS cut. The rate of velocity too has slowed in the unemployment rate, so it's actually pretty good. Yeah, if there was one index right now that should drift down into the right, it should be IWM. They hit I think they hit R5 on the monthly. That they moved more than any other index for their weekly expectations Monday. The IWM hit their monthly expectations yesterday. $100%, David. Park it. I agree, bro. Park it and drift. Park it and drift, or maybe we get a good presser, squeeze higher, and then drift it. I was talking to Bork earlier, and I said, today is not the day. And let him drift this shit sideways, burn everybody. A couple days, 2-3 days of drift. 100%. Drift it. Drift. There's no vol either. There's no vol in the market for a squeeze. Yeah, we got a 25 BPS rate cut. We got slightly negative news too. A little bit of a Fed speak change, acknowledging the risk of inflationary concerns with the regime change and all of politics, not just the president. We got House is still they didn't decide the House yet today. That said that it was still up in the air if it was gridlocked or no. That'll be an important thing if you don't already know. Did they decide that today? Let's look that up. You want the full mandate if you're Republican. You don't want. Let me just check this out. Yeah, it still hangs in the balance. The House control hangs in the balance as of 3 hours ago. If you're a Republican, you want the full sweep. You don't want the gridlock.
Data, who again see a 25 basis point cut again in December. LSEG data also reporting a further 67 basis points on top of that for 2025 as well. Rate futures pricing currently seeing a total of around 87 basis points of easing.
I don't know if it'd be long here
until the end of next year.
You could be. You might get one more squeeze out of the. Presser, but if only to develop calls to the upside. But you just torch, feed into it with just there's not a lot of, you can see right now in the market. If you look at Bookmap right now, there's not a lot of participants. So dealers can sell hard and heavy, and unless you trigger mass buying again. I would assume that people are going to wait slightly until the press conference and see if Jerome expands upon possibly inflation concerns next summer. Yeah, you can hold your January calls. Fuck yeah. If you get January calls, or I'm looking to get back in January and January 14th. I think it's the 14th or 17th. Well, one other note here too. They made a comment earlier today. Biden made a comment that the transfer of power is on the 20th. Is it the 20th of February? It's 20th. Is it January 20th? January 20th. So that would mean, or that would imply that if you had your calls if you had calls make sure that they're print on the 20th or in or around there. I think they're gonna torch you guys. Might get one more squeeze. $595.99. Is that good for you? How about if we squeeze just like here and then the failure, and then rope your ass in? Start repricing all these calls. Does that make sense, Waterboy? Yeah, something like that, right? They reprice all the calls right in here, right? Nice little repricing. Murder all the options chain. Give you one more pump up here. Reprice the options chain. Failure right there. Reprice the options chain. Get to like 3:30 in the afternoon. All the call holders start selling. Does that make sense? 215. Let's look for the FOMC presser. Fed live feed. Boom. There we go, baby. Fed live feed here for you. We'll be ready to rock for this one here in just a minute. Yeah, IWM yesterday made a note in the show yesterday that IWM traded its monthly, like a month. They didn't trade just their weekly expected move. They nailed their monthly expected move. That's like a 4 fucking sigma move or something like that. That's like 1 out of 1,000. Not 1 out of 1,000, but it's pretty high. Very rare. Are they really discussing putting in another justice right now? That they're realizing right now that they've, like, the Democrats are realizing right now that they've fucked up like the next 50 to 100 years with the courts. They've fucked up. They have like royally fucked up. Ruth Bader Ginsburg, that was a disaster. All vanity. All vanity. I'm going to read this to you here just right now, okay? UBS saying it is likely that Chair Powell will be peppered with questions on the pace of rate cuts to come, the potential for skips, and maybe even where the rate will ultimately end up. We expect the chair's tone remains similar to that of the September meeting, and that any guidance will remain data dependent. As we noted last week, we doubt he will commit to anything at this juncture. Neither another rate cut in December nor skipping that meeting. He might say the FOMC would consider lowering rates at the next meeting, but stop there. Yeah, there's like a SCOTUS. I mean, I don't. I mean, you could pack the courts. You could expand the court too. I think the greater question might even be just court reform. The courts were never meant to be political, but they've become political. We know that, right? And they've just been weaponized by both sides. What do you like? Keep diluting the court and diluting the court and diluting the court.
So in 10 minutes time now at the bottom of the hour, we expect the start of the FOMC press conference with Chair Powell, the live video for which is available on the feed for those interested.
We also have like hearings for SCOTUS, and we know that those judges speak one thing then do something completely different. They've been politicized. They shouldn't be. I was talking earlier with a member about ranked choice voting. I really like the idea of I'm a Democrat. I don't know if you guys know that I'm a Democrat, and there's a discussion going on right now about within the Democratic Party of you should have done this, you should have done that, you should have done this, should have done that, and it's the ask is to become populists or to become extreme. And I would really like I realize politics are changing, but I'd like to see like 3 different versions of Republicans or 3 different versions of Democrats, and have the ability for all those viewpoints to be represented, and not have to say I'm this or that. And if you don't agree with this, you're not a part of that. I was just talking to a buddy about it. I was like, I don't want to be asked to be this or that or whatever. I'd like to like pick and choose. There's a lot of like, yeah, I get that sometimes too. Like, I've got other accounts on social media that be like, you're not a Democrat. I'm like, oh God, here we go. You're just a Republican in Democrat clothing. I'm like, I can't stand that. Like, if you're not with us, you're against us. Or if you don't agree with everything, like it's almost like you have to sign up for all of it. It's like this is the party line right now. Like, fuck your party line. Can I pick some of you for this stuff over here, and can I pick some of you over here for that stuff over there, and can I pick some of you for that stuff over here? I don't want to see the parties get like batshit crazy on both sides. So we're just going from like one batshit crazy to the next batshit crazy to the other batshit crazy. Right now we were stuck with like corporate Democrats, corporate Republicans, and it was kind of bland, right? And people are all fed up. Everybody's fed up, right? And for all their own reasons. You got like social Democrats, then you got identity Democrats, you got MAGA Democrats, and you got conservative Democrats. You got social liberal and or economic conservatives, right? You got religious conservatives, you got religious liberals, you got everything, and they're like, you got to be all this, you got to be as extreme as possible. And I'm like, fuck, man. I'm like, can we just get like, I don't know, like just like a sprinkling of all of it, and I can find the one that I like. I guess I can't have my cake in the U.S. and eat it though, too, can I? Oh, hell no. Don't be in zero dates here. The dealers are in there. The gremlins are running around the options chain right now. Like little gremlins. I got to build a pool. I've used that one so many times. I got my, now I got to build the hot tub attached. I'm going to go in there and just destroy all these options. John L's in the Discord right now selling you calls and puts. Tons of them. 0 date puts, like call and put sellers are just like loading them on you right now. Yeah, or something like it. And I don't want people to feel like they're left out too, right? Like it's not just like ranked choice, but like where you're represented with your views. It's like, hey, I'm I don't know, like I'm a Satanist, and there's like 500 of us, and we get one seat in this house. Sweet, we can speak. We can slam our Satanist boot on the lectern or something. You know what I mean? Yeah, I was talking to Joe Donut about once too, with like election reform, or not election reform, but like PAC reform, lobbyist reform. Like I don't like Jamie Dimon's solution to it either, and Joe described it all to me. He's a smart guy, and he was telling me, is like, just make it every individual can donate X amount of dollars, $1,000, 5,000, 10,000, whatever it is. If you're a lobbyist, you got to get like 100,000 people to back you, right? Specifically, instead of me being the wealthiest individual and being like, I'm going to give you $200 million. You actually have to have people that back your concern. That way you can actually still have lobbyists too, right? And you have real people behind you, not just like one super donor or whatever. I think that's a better way. Yeah, my initial thought on the expansion of SCOTUS was positive, but I'm not anti the expansion of SCOTUS. Like theoretically, idealistically, a black and white type non-reality, or maybe theoretically, not realistically. Theoretically sounds good because of the appeals court, matching the appeals court, but I think more so we need, no matter what their beliefs are, fucking Democrat, Republican, I don't care, some way to, well, there's two things. One would be to remove them for age. The fact that we can't do that, like term limits would be nice. Like the fact that you can just be dying in there at 98 years old. No. No. Like, just like, even if it's a long term limit, 8 years, fucking 6 years, like for life's kind of bizarre. And then the other thing would be,
Russia's Putin says we are ready to restore relations with the US.
If they commit to certain things in a hearing, they get
Putin adding that the ball is in the US's side.
They can be censored if they like say, oh yeah, I don't know, I'm against welfare, and then they go and they vote for welfare, and you're like, wait a minute here, this guy said he wasn't political, right? This guy's like a bleeding heart liberal. I love sound, baby. I love sound. 3 minutes. I got a whole list I gave to you guys yesterday, right, of tickers that I'm in love with right now. Oh, fuck yeah, sound. Woohoo, baby. Look at that. Look at sound. Look at sound, baby.
Be on the bleeding edge of news for non-farm payrolls? Then sign up today and get our special offer of Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
Look at sound. Woo! Very nice, very nice. I like it. Hell yeah, sound. Trading 689 right now. God damn. Holy shit, up 20%. Sound going burr. Holy fuck. Sound cranking. Sound pulling a Tesla. Woohoo! Hell yeah. Dude, IONQ is one of our OGs too, isn't it? Oh, dude, IONQ. Oh, yeah. How's Lunar do? We called that one out too. Oh, fuck yeah, Lunar. Holy shit. Oh my God. Holy fuck.
We are shortly expecting the start of the
Look at
FOMC
Tem. We
press
called
conference
Tem
with
out,
Powell.
ripping
Again, the
faces
live
off.
video to which is available on the feed.
Serve still hasn't done its thing, has it? God damn. TEM. TEM cranking today too. Blasting off. Holy shit. Woo-hoo! We don't talk about RGF around here. We don't talk about goddamn RGF. It's been the oh, wait a minute, here we go. Oh yeah. Oh yeah. Can you guys hear that?
Powell now taking the podium.
Voice news disconnected.
Purple tie.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid.
Woo! Like it.
Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy.
Note here, if we are bullish on this talk right now, that once the shitty questions come in, get out of those calls.
Economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would
SPX cranking right now
for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and
you got it
low at 4.1%.
That's right.
Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed.
SPX trying to trade 59.75.
Indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote
Upside target 5975.
We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term,
right out the gate,
the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timros from the Wall Street Journal.
Oh, here we go.
Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they
run the economy hot.
And if they're material, then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular.
S&P retracing the entire initial move right now.
About economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then, as of the Fed's economic projections in September, you had
entire move
quarter-point interest rate cuts
from open or from 59.50.
Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December we're going to be, again, at every meeting we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September. And in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean,
well, there's two questions going on here, or three, or not three, or
to a more neutral.
A bunch of different questions here wrapped up in all of these questions from different reporters.
We're just going to have to see where the data lead us. We have, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling.
Seems like there's some implication here that maybe inflation would rise prior to,
I would say,
next summer, like pricing in inflation before it even happens.
Again, we didn't update the SEP, so I'm not going to characterize, where the committee would be.
Howard.
Thanks, Howard.
Underhanded questions on the transition.
Elaborate, explain a little bit the two changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we net that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that. In what I've said, the path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates, and are rising deficits a concern to you?
So we don't comment on fiscal policy, and again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we'd try to get smart on that, and then the law actually passes. And you'd start to put it. You'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model, along with a million other things. So, we have a very large economy. Many things are affecting it at any given time, and a law change of some kind would go in there, but it would go in. But it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time, and of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And the overall effect on the economy at any given time. So I think that's a process that takes a lot of time, and that we go through all the time with every administration, constantly.
Some nice range expansion here.
This will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think
real nice range expansion.
We're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question, are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find 3 weeks later the 10-year was 50 basis points lower. So it's material changes in financial conditions that last, that are persistent, that really matter, and we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's, of course, a great thing and highly welcome. But, of course, our mandate is maximum employment and price stability, and we think that even with today's cut, policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market even as our policy stance enables further progress toward our inflation goal.
Really nice range expansion today.
What might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
Uh-oh.
So, we haven't,
the downside move coming
at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral, or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction.
It's funny as fuck there, John.
Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows.
Well, bullshit.
So
tell them about when you don't slow the pace and it fucking buries us in a recession.
Beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect.
Yeah, I like 12 month.
For example,
But 12 month doesn't mean crash the economy. He's not going to tell you that, though.
Were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation?
Tell them what it is.
That catch-up inflation also in insurance and several other areas. So
it's not bad inflation. Tell them that.
We're not declaring victory, obviously, but we feel like the story...
It's not the crash inflation.
...with inflation continuing to come down on a bumpy path over the next couple of years. And
it's like running hot inflation. It might even be a little bit of pricing in Trump's presidency, too.
Really good data.
Wall Street's been pricing that shit in for months.
Aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there.
Yep.
And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's,
you ain't never getting fucking neutral, bro.
Meaning other than we, to the extent the
you're gonna run this fucker like they're gonna run it like a ability. They're gonna load it up with like
as we
race car fuel.
That middle path between the two risks.
Dually carbs. Is that what they are? Yeah, dually carbs.
Hi, Chair Powell.
We're gonna run this fucker hot.
Two questions.
We're gonna run this shit like it's 1980 fucking 19 fucking 95.
About the economy from the
Don't bullshit us.
First question. Second question. I want to talk about
like, seriously
indicators, and I do so with great respect for your attentiveness to the
right
employment.
Right, Canada Fed. This is all bullshit.
The unemployment rate has been at 4% or higher for 6 months.
Yeah, exactly.
Measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election.
You know, every fucking question is on that.
You know, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. You know, there's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's come down significantly, moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be.
So I'm going to talk to you guys about something what he's talking about right now. So,
because I do think it's.
I'm going to leave this over here. So we had participation rates
to be in a good place, and our policy, of course, is designed
historically like down, spike up, good economy, down, spike up. This is like 1950s.
You know, you mentioned a bunch of indicators, and you're right. You know, the
down less and less and less workforce participation rates.
Rate is back to a normal level.
This is like COVID here.
Is normalizing. You mentioned wages. Wages are still
we're like bouncing in here right now.
Just a bit above.
You know, he's asking you like when does
to be considered
too much unemployment become a problem, or too much unemployment or job offers.
If we see
same that mix.
You know, more sustainably at these.
I mean, they're going to be hauling people out of the streets.
So I would say, in fact,
I'm like that. That's what they're going to be doing.
That wage increases are now consistent with 2% inflation, given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer-term trend. That has always been the case for 50 years. But, you know, it may
be back into the prior high right now.
If you look at the NIPA revision.
Prior daily high.
A month ago.
Be warned, right here is 5975.
Activity readings.
5975. We're coming in at 5975 right now.
Overall, it's a good.
This is a huge gamma bar.
20 different data series.
This should be top of the market. Just a note.
But
we can possibly trade closer to 6,000. But a warning to you:
we don't think we need
on SPX we're trading 5,975. 6,000 would be the call wall, actual call wall. Now trading 5,975.88, 5,976.
Advisors have suggested
Coming up to the daily target of 595.99 right now.
No.
Can you follow up on? Do you think that legally you're not required to leave?
Throw us over 5. Yeah, there we go. Slap it.
Mike.
Michael McKee from.
Now slightly above 59.75. We are above the gamma bar.
What the data
call wall stands at 6,000.
Dependent on the data.
Wish upon a star.
Assessments.
I wonder where you are.
CEOs or other officials around the country. What did you hear today?
Is anybody buying puts here?
About what companies and consumers think of.
Does anybody, if there was a place to short, then we're pretty close here.
Backwards and
or slightly higher
with what your forecasts have been and what you think the.
I'm going to assume a bear's out there going top ticked it just there, Captain.
It's hard to characterize a really interesting set of discussions we had. And you should see them in the minutes.
There's the tweezers.
But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the
just a note, we just traded the gamma bar 59.75. There we could theoretically trade like 59.85 somewhere in there.
2 years ago, it was.
We're real fucking close.
They feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously.
Oh yeah.
You're seeing. What 2.8%?
Oh, bears are like yes.
2.5. This is a strong economy.
Give me just 30 seconds of doom.
Well, the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from. What I hear people hear from.
I'm short with my whole account right now.
CEOs in my job, but I hear what others summarize from.
What about the margin if we go up to 6,000? I don't care.
It's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall.
Balls in, puts till Friday.
The areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like.
I'm always early.
Clearly, geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change.
Just to note, 59.75 target. That was hit.
People talk about.
Call wall, 6,000.
It's on the horizon all the time.
If we do begin
look at the U.S. economy
to trade above and hold,
performance has been very.
If we don't auto reverse to the downside,
that's what we hear from business people.
If they're able to get up here and get a new high, you got to get out of those fucking shorts because they're going to try to trade us.
Could even be stronger than this year.
Where's it at? Right up there.
Hi, it's Andrew Ackerman with
big old gap. It's a little bit lower. I got it at 600, but it would probably be.
Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits.
Volcker.
Financial, economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget.
Oh God, this fucking bear. We got a bear.
Historic highs that are and rising. Is that something you'd speak out against?
So, I have said many times.
We got a fucking bear reporter.
And what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that. And you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now I can say that I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions. Just said it again.
Okay, thank you. I guess the other question is, to follow up on Victoria's question, do you believe the president has the power to fire or demote you, and it has the...
Oh, dude, this guy is... Who the fuck found this guy? Is he from fucking... What is he, from Twitter?
With leadership positions.
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
Courtney.
Who the fuck is this guy?
Courtney Brown from Axios.
Somebody get a screenshot of that guy and post him in the fucking Discord. We gotta post his ass on Twitter. Who the fuck let the FinTwit reporter in the building?
Those uncertainties are, and whether or not it includes some of the proposed
Jerome's like, the fraud goes on.
put out on the campaign trail, tariffs, for instance.
No, I was not referring to the new administration's policies at all. Nor
next question. My predecessor, I won't even name his name. I don't even say Volcker in this building. Next.
I mentioned this in my statement that.
Who the fuck let Northman Trader in the fucking presser room?
That the economy and we think our policy are both in a very good place, And, but.
Who let Haas in?
You say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved.
Was that Chase Winter? That might have been Chase Winter.
And we lost our chance to get inflation.
He is a reporter.
So we have to avoid that risk. And that to avoid.
God damn it, Chase, is that you?
The other risk is that we move too slowly and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people.
Who the? Yeah, he did, didn't he, Waterboy?
So these are two.
Somebody get his picture.
The two risks that we have to manage, and so we're in the middle there. We try to be in the middle.
Tell that fucking guy to get off FinTwit.
Again, the idea is to maintain, support the strength we have in the labor market and in the.
Jesus Christ! I'm gonna get a clip of that video.
Somewhat less restrictive, but still restrictive policy, enable further progress toward our 2% inflation goal. So there's, this is a thing where we're meeting by meeting, we're going to be making our assessment of.
Fucking guys trying to talk about fucking Jerome paying down the deficit and pulling a Volcker. I mean, what the fuck are you talking about?
As important as the overall arc of them, and the arc of them is to move from where we are now to a sense of neutral, a more neutral policy.
Fucking guys trying to run to the front of the podium and hit the nuke button.
Works. We're pretty sure it's below where we are.
Rips his tie off and his shirt. He's got a hairy chest.
More uncertainty about where that is, and we're going to move carefully.
It was like a fucking reporter, a terrorist hiding in a reporter's clothes.
Increase the chances that we will get it right.
Simon.
Thank you, Chair Powell.
Yeah, Miro's nephew.
I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with, I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close.
He doesn't want to answer shit about long-term bonds.
That's been a traditional one that we look at a lot, but overall, expectations seem to be, and really have throughout this.
These guys are all trying for a gotcha moment.
You're right to say we watch that very carefully.
Just tell us inflation is going to rage because of Trump.
Expectations to drift upward, but that's really why we
just say it.
Sharply back in.
That's what they're doing. They're repackaging the question again and again and again and again. There's a bunch of bond boys out there just pissed off.
Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but
you got it.
Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
So you're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example. And the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better, and that's what we're trying to create. And I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just I think what needs to happen is happening, and for the most part has happened. But it'll be some time before people, regain their confidence and feel that. And we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not going to get into any of the political things here today, but thank you.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
Oh, God!
That's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan.
Oh, fucking A! Like, where is this going?
Because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down.
He's like, bitch, that shit. Sunset. He's like, that shit changed the day Trump was elected.
The kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far.
Oh, she's way behind. That stagflation trade is out the door.
Complete the inflation task.
Out.
Also keeping the labor.
Run that shit hot. If that shit rolls over, it ain't gonna be stagflating. It's gonna be fucking crashing.
Interest rate hike next year.
I wouldn't rule anything out or in that far away. But
yeah, stagflation trade. No.
I mean, our baseline expectation is.
If Harris had won, maybe
to move gradually down.
Possibility.
The economy will continue to grow.
No.
At a healthy clip, and that the labor market will
run it till it breaks, one or the other.
That will not change from the September SEP.
Trading 596.21 right now.
Short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a war where we can afford to rule things out a full year.
Look at me smiling. He's like, are you crazy?
Certainty in what we do.
It's like that trade is right now dead. Died 2 days ago.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our.
Yes.
Framework. It's not something
we're not going anywhere near that stagflation. That shit left the building the moment Trump was elected. Yeah, you can't answer those. Those last questions were insano. Like whoever let those last three reporters in the building, I'm like, what? All right, party over. Dealers are like, party's over. Those last few questions, waste of time. Landscape has changed for now. If they run this shit hot, right? There's better chances of like crashes. And like the risk is like running it hot. And if it breaks at any point, you'd have a crash on your hands. That's not stagflation. Stagflation's like this sideways, like low unemployment, But that there's like no tariffs and that shit, or there's no removing removing people from the country. Like, it's that trade is possible, but not with the expected economic policy change. Fuck no. You could break shit, like get into a trade war or something, but that doesn't lead to stagflation. That leads to like crashes and shit. Violence, volatility. No. No, I'm in no risk off. I'm in zero risk off here. I'm looking for us to trade 6,000 and roll to the downside. I'm looking for like a sideways trade for like 2-3 days, 5 days, something like that. I'm no risk off, none of that stuff. I'm not bearish here. None of that stuff. I got zero bear in me here. None. I'm looking for a trade to trade 6,000 on SPX and then sell that. Yeah, the stagflation trade that's not on the table right now in any way, shape, or form. And that's why they keep asking those inflation questions and like there's bad inflation, there's good inflation. You know what happens with inflation, right? You got to get wages up. Companies don't want to pay wages. The longer they don't have to pay wages and inflation can be up, higher corporate profits. There's like you're basically saying, how do I phrase this simply for you that you can digest it? You have like the COVID party, right? And, we're like printing money. We're having a fucking blast. Everybody's making money, blah, 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 right? Woo, party time. Everything goes bananas, right? All the data goes bananas. And then you get the responsible people come back and they go, we need to clean up the fucking mess, right? We're going to clean up the fucking party. Get some QT going, get some rate hikes in there, slow everything down, right? Chill out. We do that, right? 2021, or going into 2022, start trading it sideways, right? Going in October. And we start ramming it again, right? Ram, bring it back to where it was at the start of 2021, right? So now this is outside of politics. You got Biden. He's going to run Harris, right? Everybody's being responsible right now. We do have out of control deficit still, right? Dealing with COVID and all that kind of shit. Everybody's responsible though. They're like literally like you got data that's like we got data that's like well, this is like deficit stuff too, but you basically have like a normal trend, COVID up like this, trying to bring it back in. Data point going down, normal slope, and go all the way down. They're trying to rein it back in, right? So we're back on trend again, right? So generally speaking, we're on trend. So basically right now you got a question of, are we going to continue to be responsible or not? And what's being propositioned right now is, hey, we're gonna bring the deficit down, but we want to party. Now, are they going to actually drop the deficit? No. That's not the plan, even though you think it is, even though with your Main Street hat on, what it really is let's fucking party. I'm telling you, it's what it is. It's party. I'll give you exactly what to party with. I'm going to tell you what to party with, and you're going to party with that shit. And we're going to run it hot. And anyone out there that's asking those questions about inflation, like the sane people in the room, they're being told to go fuck themselves. We will run it hot if we have to. And there will be a window of making money until we break some shit or we get into a trade war, we start World War III, whatever the fuck it is we're going to do. It's the fraud goes on is what the play is. Whether you like that or not, as soon as we're done with this show, you can go back home, put your Main Street hat on, and say we're going to bring down the deficit. I promise. But here in this room, greed rules. Wall Street, greed rules. Break it, run it till it's hot, till it breaks. I'm telling you, that's what it is. Warning you now. And especially if there is an implication that they are going to break it through this, you run it so it goes straight up until it does break, right? We've done that when? We did it in 2008, we did it in 2001, did it in fucking 2020 and 2021, didn't we? Ramped it straight up. Straight fucking up, vertical. And all along the way, people cried the whole fucking way. Cry, 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 cry me a river. You know what I mean? There's like 3 FinTwit reporters in there. They had like 3 of them. I know it's just some PBS or something, but those last 3 reporters, it's like, oh God, get me out of here. Fucking Fin. Yeah, that's what they're gonna do. Fraud goes on. I'm telling you, that's what it is. I'm telling you, money sloshing around. Oh, you're not getting we're not doing QE cap, we're doing QT. How about fucking corporate fucking tax rates of 15%? How about extending 21% corporate tax rates? That's money sloshing around. How about gutting the federal government? There's like, how about deregulation? Well, I listed them off for you 2 nights ago. Listed off to you exactly what the trade is. The trade is rape and pillage. That's what it is. I'm telling you. I'm telling you. Dude, sweet job, Winky. Good job. That's what it is. I know you guys out there, like, you guys want change and you want this and you want that. Fraud goes on. Fuck. That's what it is. He did say that it's unsustainable. It's unsustainable. We'll pay for it. It won't be with stagflation. It ain't going to be that way. We're choosing violence. We really are. I'm going to be honest with you guys. That's what we're doing. Neither candidate. Both candidates, Harris was projected to expand the deficit by $4 trillion. Trump is expected to expand the deficit by $8 trillion. Double. That's right. Don't worry. Be happy. We got this. Things are going to be even better next year. I know. Are you going to pull a Volcker? Get the fuck out of here. We're going to run it till it breaks. We're going to party. How do we expand by no trillion? I think the promise is out there that we're going to do that right now. I think it's fake, though. I think it's a scam. Truly, 100% honestly. They're going to tell you they're going to cut the deficit. They're going to cut waste. They're going to cut this. They're going to cut that. They ain't cutting shit. And I'm going to tell you one last thing here. Okay? This is the secret squirrel, okay? I'm going to talk to you about something that you probably don't think about with your Main Street hat. You know, you come into office, right? You got 4 years. He can't run a second term, right? He's got 4 years, right? So you tell people, like, I'm going to cut the deficit. So you pencil in something that would be accounted for $2 trillion in cuts, amortized over 20 fucking years or 40 or 30 fucking years. Does that make sense? So that's just creating more debt and not actually balancing shit or not actually spending less. You understand what I'm saying by that? Like, so I'll simplify it for you. So you and I are sitting at a kitchen table and it's 1950 or something, right? Or no, we have credit cards in the 70s, right? So how about this? Or let me try to paint the picture for you. My wife and I are sitting in our dining room. I yell at the kids to go away. I knock the bourbon off the table or the scotch off the table. And because my wife's been mad at me all night long. And she's like, Jim, she's like, we are we're like spending way too much money. Right? She's like, we got $100 coming in and we're spending, I don't know, $1,000 this year. We had $100 come in this year. We spent $1,000. We're doomed. We're way over budget. We're running out of a deficit of $900. What are we going to do? It's unsustainable, Jim. We're going to go bankrupt. So I go, okay. How about I tighten the belt? She goes, how are you going to tighten the belt? And I'm like, well, cut the deficit that we have in the house for this year by $900. She goes, how are you really? Yes, let's do it. So I go, okay. So I get in my big Cadillac and I drive down to my local bank. I got a friend down there and I go, hey, Bob, how about you give me a loan for 20 years for $900, a low interest rate, maybe even zero. Okay, no problem. Let's go home to my wife. We got like 6 months left, right, in the year. And I tell her, okay, honey, I just solved the deficit of $900. And she goes, how'd you do that? I go, oh, I took a loan. And I'm going to pay it off. I'm going to make somebody else pay it off for 20 years. She goes, great. So she's feeling really good now, right? She's like, yeah, oh, yeah, it's just cut the debt. Just like that they did so much work. Meanwhile, I'm like, I'm going to go down to the other my buddy over here and take another fucking loan for like $500. Or I'm going to get a credit card. I'm going to run this fucker up another $900 while she ain't looking. You get what I'm saying? So I took care of that $900 deficit and I just slammed another $5 or $9 or $1,000. Meanwhile, I'm partying for the next 3 months. I'm out with my friends. I'm fucking gambling, hookers, whatever. End of the year comes. And my wife, she's like, what happened? We're back at $900 in deficit this year. And I go, fuck it, I'm getting divorced. I'm out of here. That's what I'm not. I'm not running for office again. Fuck you, I'm out of here. Bye-bye. Woo! Bunch of debt for you again. Deal with that shit with the next president. So that's basically it right there. Is that unsustainable? Yes. Am I going to be there in 4 years for it? Fuck no. I'm out. What the fuck do I care? That's really, truly what it is. That thing I just said to you, I'll almost guarantee you, I'll give you like a 99% chance that you will see $2 trillion cut from the deficit. But it's not like they ain't doing it today. That shit ain't being paid off today. They'll tell you that's what it is, but in reality it doesn't. In the back end, they're going to spend a fuck ton too. You got it. You got it. Until it breaks. Fraud goes on until it breaks. That's what they're telling you. We're here to piss away some more money. We're going to party time. Yeah, you got it. You got it. Who could have seen this coming? Global financial crisis. They'll blame it on Japan, carry trades, or something this time. You got it. You got it. You got it. They're faking you out, I'm telling you. Telling you. Well, yeah, like there was like with what Biden and Kamala and Jerome were doing was basically that like stagflation trade was possible. They were trying to basically get us out of the hole with time. But the reality is that going to work? Like the longer you do that, the longer you're you might think like they're not fiscally responsible, and they aren't. But they're not they're not out of control either. We're changing paths. Now, some of what Musk and Trump propose, it's possible. It's possible we could reset our debt and stuff. If we really do that intentionally, it's possible that could work, right? Some form of austerity. It's possible we could do that path, like the one where we actually do take the deficit down. I don't know that that's a reality, though. Not intentionally. It's possible. I just don't see it in 4 years. I don't know if that gets passed quick enough, or if we recover from it. And how do you fix that too? War. You fix it with war, believe it or not. If we get on that path, like we actually make everything in the U.S., it'd be very painful. Cost of goods would go through the roof. Cost of services would go through the roof, and you could trigger not a recession but a depression. Now, Musk is saying 2 years of depression. If we don't get out of it in 2 years, it would likely trigger a war, a major war. But we're already heading towards that anyways to some extent. Like triggers like trade wars, triggers real wars with real people, and we have that coming anyways. I mean, I heard some people this week saying, "I voted Trump." Kids, I heard kids saying, "I voted Trump because I don't want a world war." I think that child might be too young to realize that it's probably a foregone conclusion of thwarting that war. It's probably going to happen. Some way, somehow, it's going to happen. Trade wars will trigger that shit. You guys know about history, right? Like how these things start is usually with blockades, trade wars, denying access to raw materials, raw goods, markets, that kind of stuff. It does create big wars, right? And we're likely heading there anyways, whether we want to or not. That's what happens with like economic theory. Is the positive economic theory, or at least today's liberal current economic theory, is that if we have free open markets, nobody's going to try to topple hegemony. Everybody's making money. Everybody's happy. There shouldn't be any wars. But in real practice, there are humans that say, if we have that free market system for at least for us to climb up that ladder to equality, we're going to use that to build some bigger bombs, and we're also going to infuse their markets with cheap shit so that we can destroy their industry, and then we're going to attack them, and that happens. That happens. So you have like the human, you have the theory, and then you have the application in real life. Like, like theoretically, you're like, okay, theoretically this should work. So you apply something, right? Like theoretically this should work. And then all of a sudden there's something that's a wrench thrown in that you didn't account for. Some unknown, some variable that could break your theory, right? So theories sound great, but you don't know what other people are doing, right? So like you've got basically our steel industry was destroyed, and our capability to produce steel, right, and goods, and actual goods, right, manufacture, technology, that kind of stuff. We don't produce a lot here in the U.S. anymore. And theoretically, you're like, that's fine. It's okay for an emerging nation or emerging country to build that stuff. We don't have to. But meanwhile, there is another country that has that capability, and they go, you know what? See that country over there? Maybe we can topple them. You know, we'd like to run the sea lanes and the air, and push our philosophy around the world, right? How do we do that? Right? Steal their tech, flood their markets with things they can't use. So, like, that theory works in theory, but in practical applications, it doesn't always work. And we're kind of at that tipping point, and so you might as well run it hot, right? Might as well get into that trade war and face those threats and stuff like that, one way or another. And I don't think Trump can stop that. I don't think Trump or Harris can stop that. I think they both are. I think I look back on all the administrations, they've all been leading up to this moment. All of them, all the Republicans, all the Democrats, they've all done. We've escalated and escalated and escalated, and we're likely going to have to face that at some point. The U.S. military is spinning up right now to face that threat. 26, 27, somewhere in that time frame, and that's what we have to look ahead for. So we're either going to get into this situation where it's like the Cold War. You have like a Cold War 2.0, and until someone falls apart or a system falls apart, or you have full-on confrontation, or you have like dominoes, or not a domino effect, excuse me, surrogate wars going on, just like Vietnam, Korean War. You see it right now with Ukraine and Russia. More flare-ups like that, Taiwan stress, Middle East going on right now, right? We're heading in that direction right now. I warn you of that. That's where we're going. That's real. Yeah, definitely. God damn, seriously? Do they know if those are buys or sells, Waterboy? So anyways, that's what we're heading towards, one way or another. That confrontation happens regardless of political party. That's really, really, really happening. I want you guys to know that shit is really, 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 really happening, regardless of the outcome of it. So might as well make some money off it, right, as we do it. I guess that's the thesis. Make some money as we're doing it. Run the economy. If we burn the economy down, war is going to be the solution anyways. War will help the economy rebound. No, we're going to war. I can assure you of that. I know for a fucking fact. I got family still in the government. I'm telling you right now. We're going to war. We're either going to war or stalemate. It's one or the other. I assure you of that. Trump ain't stopping shit. And neither his successor. No matter who that is, even if it's Vance. I don't care who it is. I don't care if it's fucking Jesus Christ is born. It doesn't matter. We're on that path. That path is set in stone, one way or another. That doesn't mean it turns into World War III or turns into a real, true ground war. Doesn't mean we actually follow through with it, but it does mean that we head there. We headed there in the 50s. We're there right now doing it again. Fucking, that's what we're doing. No, we came off that path. We came off that path in the 80s. Came off that path in the 80s, came off that path when the USSR collapsed. We came off that path. Probably the best time in recent history is the 1990s. We weren't on that path in the 90s. Not at all. Not at all. We had a good breather. Good breather. Most certainly. Matter of fact, you saw structural changes in China. That we had massive changes. Those, of course, turned out to be bullshit, right? Trust him. I was in USA. Hey, who is that? Hey, bah humbug, fuckface. Listen up closely, fucko. I was in 25th U.S. Army Command, brother. I sat right there and watched it, dude. I know about that shit. My brother. I can't even tell you what he does. Can't tell you in public. Some people here know, but I'm telling you, man. I still have friends in the military this day. They're doing it right now. Go to fucking Hawaii. You out of your fucking skull? They're doing like fucking, they got military stacking right now. Stacking outside of Taiwan. U.S. military. You're out of your fucking skull, bro. Like, get out of here. Crazy, dog. You're out of your fucking mind, dude. It's literally the platform right now. We're literally putting tariffs on. Why? Like, literally, learn about economics, man. Seriously. Nostradamus. Fucking think we're going to like free. We're like way heading away from like you think we're heading towards the 1990s? You think we're heading towards like U.S. hegemony? Like, no way, bro. Crazy sauce. We're building, dude. We're like literally a steel trade is on right now. Like, you're crazy. You should short steel. If you think so, you should start shorting steel. All right, that's all I got for you guys. 3:38. 20 minutes left to the end of the day. I'm gonna give you guys a quick expectation for tomorrow. Expectation for tomorrow. Today's Thursday. Got one more day left on the week. That's killing me. You can tell he doesn't get the briefs. Like, you can tell he doesn't have the Trump trade. You just tell. Like, this guy's going to lose all of his money. Like, we're literally gearing up for war. Fucking the whole market. Like, all markets right now. Man, guys, I don't understand how you guys make money. All right. All right, here we go. Let's get serious again about making money. All right, what do we got going on here? Let's get rid of some of this crap on the screen. All right, move that over. That over. There's your 59.50 over there. Something good to see here is we got a little bit of range expansion. So we got a little bit of like freedom to move. You see that? A little bit of freedom to move here is kind of nice to see. A little bit more like ping pong, ping pong, ping pong, right? Not just vertical, straight up and down. All right, nice little bit of range expansion. Kind of nice to see, isn't it? A little bit of movement in here. We haven't seen that in a little bit, couple days here. And I want to talk to you guys about this. We've got this like 595, 596. I want to show you one other thing in the bottom right-hand side of your screen. We've got SPX over here, right? We're trying to build out calls. Trying to build out calls right now. Or call gamma that matters to the upside. This morning we woke up and 6,100 down. Let's go to an hour for a minute. 6,100 now matters. Means that like the call wall was lower and now it's higher, right? It's at 6,000. See it right there? Call wall is now at 6,000. 166 million in gamma there. Now, we can continue to climb the wall of worry. The expectation today is that we close green, right? The three-soldier trade to the upside. Close green. And I would really like to see us trade this 6,000, this upside. Oh, hold on. I'd really like to see us trade this, like today, open 6 or 10 a.m. tomorrow, something like that. Something like that, right? Somewhere in there. Try to like get up there, even if we fail it, like 59.80, 59.88, somewhere in there. So it's still bullish here, believe it or not, into at least the open tomorrow. So let's go to the trigger screen here. We're at a 30-minute basis, go to an hour basis. We got a Thursday, Friday. We got a lot of time, don't we? Let's do like 11 a.m. 11 a.m. Right about there. You guys are like, what is he thinking? We're not going up there. There's no way we're going up there. I'm going to tell you what. Let me just get rid of all this real quick. Get rid of all this stuff. Bam. Get rid of all this crap. Pivots, all that stuff. Just get rid of it. Till we break these two little green lines right here. That one right there. Some nice range expansion here. That's always good to see, right? Always like seeing that stuff down there. Bring it even down a little bit more right there. Thursday, Friday. Oh, hold on here. All kinds of time going on, don't we? All kinds of time. Got the half-hour trigger, got the hourly trigger. This is all supportive. We haven't broken any of this yet here. That right there going on, right? Bam. Back to a 1 hour basis. Where's the close today? 1600. Oh, nope. That one there. 1600 right there. Make sure I got that right. Expectations between today and tomorrow. Okay, this is 7 o'clock on Friday. We got Thursday, Friday. You could actually take the time and put it all the way out to about 11. You could even make it 1600 if you wanted to. You got 7, 8, 9, 10, 9, let's call it 9 a.m. $600. Let me just do one other thing before I even put that up there. Hold on. Premium targets right there. There's a target right there. Hey, the arrow's already there. Sweet. There it is. Bam. That's a red one. 1 day. 1 week. Check that right there. R4. There's your pivot point right there. You know, you can buy the dip anywhere you want down here. We're still on trend is the point, right? We're still on trend into the close. You have until, you know, we could literally trade all this. We could like trade this close, commit it tomorrow and fuck around, grind you out the whole way and slam it up in a Friday close. I don't think it really matters. Now, this might not correspond exactly to what this might not correspond exactly to what to expect in action tomorrow, but they could do this in the overnight. A lot of times they like to nail this up here, like 9:30, 10:30, 11 a.m. straight up, and then we just drift down. But the idea here is into the close. that we go up, even if they murder options, then get us up there on Friday, maybe even into Monday. The way is higher as of right now. You're looking for dips to buy between now and tomorrow. You're looking for dips to buy at 593.39 and 590 if you can catch those dips. But they're just staircasing us up. You can see it right here, right? They're staircase. This is a 1 hour basis right now, staircasing us up for tomorrow. The way is higher. Now, saying this right here, right? Now, this is all in service of one thing. You create that FOMO, right? You got the trigger of FOMO, get us up here, and then we get our actual roll to the downside. And I want to show you what that looks like, what that roll looks like. It could happen right now. We had a high here at 59.83. That's pretty goddamn good, right? 59.83, that top tick right here. Oh, this is 59.83 right here. That's pretty fucking close, isn't it? Oh, wait, you can't see it. Now, this is 59.83 right here. God damn it, wrong one. You could say that's the top. So, you could say, Cap, we're not going up here tomorrow. We're not going to like below. It shouldn't be 6,000 either. It should be like, I think it's like 59.83. And so it's like $2. How about like right here? Somewhere in there. I'm trying to relate this to SPX, but I'm having a hard time getting the exact, doing the quick math in my head. Somewhere in here. So you could say this is the top. You could say that's the top, Cap. We're not going to 6,000. You could also say, well, if I can buy a dip down here tomorrow to get up there, down here to get up there into the close on Friday close, makes sense to me. If you're looking for what that roll looks like, we'll bring this in just a little bit. And there, something like that. How about like this right there? What I want to show you on this, though, on this top here, right, is the roll down and how far do we roll. And that's where the important part comes in. I want you to look specifically at this gap right here. And I think that, let me get rid of that shit. Hold on so you can see it. Can you see it now? Yeah, you can see it now. What I want to show you here, if you can see it, right? So the expectation is we're not done going up. We're going to smash into that 6,000. And look at all these buyers here. There's like strength here. They bought more today than they ever have. I think I posted something in the Discord for you about how much buying they actually did today. Now, once those flows back off, we have the chance to roll down a little bit. But I want to stress to you the importance. I originally thought that we would trade, I think here or here. I think right here, somewhere in here. I was targeting. See if I can draw this out for you. Like something down here. But I don't think you're getting it. That might be the best that you get. Like, we can leave this behind. If you're focused on closing this gap, I think you may be disappointed. This should be farther out, like Monday or something like that, next week. Yeah, break below there or something like that. You get my drift, right? Move that shit over. Rope your ass in here into the close tomorrow, where the fuck that is. But like the coming down, are we coming down on Friday at the close? Are we coming down on Monday at the close? And then how deep does it go? I think you'd be lucky to get 586. I think 590 might even be the bottom here. You might not even get that deep. And I think we leave this behind. I don't think we're coming back for this. As my general point. I think even trying to target 586 is a hope and a prayer. This could be like way up here, and this could be way up here. And then we're off and running once again to the upside. 586 would be the hope. I'm hoping we can get down there. But there's no guarantees. And I think this is still a process. So I think we're still in like this process of like up here, slow roll down. And I think at best into next week, target 86 at best. Now I was talking to Bork earlier. He was like, you want to put this trade on for like, we're going to the moon or whatever for a Christmas money holiday rally, that kind of stuff. I think it's more of like a, consolidation, quick trip down possibly, and we're off to the next place. Trading that 600, same kind of thing, off to the next place. Now, I'm going to expand upon this. I'm going to expand upon this with you in a brief tonight, I think. I want you to get with, if you go check out what Volatility Wiz posted earlier in the Discord, there's a bigger story here. When we were buying calls down here, right? So we were buying call spreads down here, okay, for mid-January. And not many people bought those call spreads. Nobody was buying call spreads down here. So they want to get back down here so that they can get long. And I want to warn you of something. The risk is not to the downside. The risk is to the upside. So if you get this here, anything in here, if you get any of this, I'd be looking to get long. Like getting long there. If they still dump you down a little bit more, it's still going up, is my point. So the risk is to the upside, not the downside. As of right now, we're in the most supportive time in the market. Larry Williams told you that. Target by February or January 20th, whenever the transition of power happens, 620. Maybe even 625. We got a lot of work to get there, don't we? That's your initial move, right? 1, 2. This is the bigger move, right? This one could even go higher, believe it or not. That right there. I know this is on a different time frame, but how do I go talking to you guys? So, I would like to see a pullback and a sideways trade. Consolidate it, and then we pump again. I don't think you're pulling it all back. We might pull back that gap, fill that gap. But I would not be shocked to see like a pullback, maybe at 90. We trade like 86.90, 86.90, 86.90, somewhere in there, and then we start just ramping. We don't have a lot of time left. It is November 7th. We don't have a lot of time left into December 31st. We've got what, 7 weeks. It's not a lot of time. It's like, think about it. You get from now for 7 weeks to get up to actually break above 6,000, 6,100, 6,200, and then like January 20th. Don't get left behind. That's all I can say to you guys. Don't fucking get left behind. They're gonna reprice the VIX. They're gonna reprice volatility. You're gonna see a time where people are getting ready to do Thanksgiving and do Christmas and Hanukkah and Festivus. Market's gonna fucking usually consolidate and then rip, melt up. If we get volatility in December, sometimes you get volatility in December, you get a quick rip down. You know, you're already long. You're going to get paid. It's going to go right back up. It's probably the easiest time of the year to get meaningfully long. You got hedge funds out there, long shorts. You got like this long short, like COT hedge funds that haven't been long tech all year. And they're getting long right now. They're buying the fuck out of the market. So, I don't know what to say here in this stuff. Like, we come into this every winter. There have been years where we have crashed. We crashed in when Reagan took office. We crashed in 1980. We did it this slow bloodbath. But we haven't lost the hourly trigger. We haven't lost the buyers. We haven't lost any of that. There's nothing showing that right now. We can switch short if that happens. The real risk here to you, I want to warn you here, is to the sell side, not the buy side. The real risk is also to the buy side that's scared. Hopefully, I'm hoping we get 86. 90. There are too many historical examples of this gap up we did in the last 3 days where we do not close that gap. I need to warn you of that. We leave them behind. They're gone. We're off and running. We ain't looking back. So you could wake up here and like, the odds favorite is that we wake up here on December 31st, and whenever that inauguration is, and you're going to be left behind if you're not long. The risk is not to the buyer. The risk is to the seller, and the risk is also to the buyer that's too afraid to get long. So hopefully, we can get this nice drawdown. You know, like we get this nice drawdown tomorrow and early morning, late, we get the drawdown. I don't know. Let me go back to the talking to you guys. We get a drawdown early morning tomorrow, not 10:30. We get a drawdown at 3 in the afternoon, 2:30 in the afternoon. We've hit our targets. I don't know. We fucking trade sideways. And you shouldn't be looking at getting short. Like the trade here is not getting short. The trade here is finding out where the bottom is and when they're going to turn it back up again, so you can get long again. The trade here is not short. The risk to you is that we continue going higher. We trade sideways. We grind sideways, fade a little bit, and we're off and running again to the upside. And another thing here too, CTAs. If we trade above 6,000, they become buyers again, like above 6,000. So if you see us get above 6,000, you're going to see trend followers jumping on board and riding that train up again, like 6,100, 6,200. They're going to try to ramp this fucking thing. And we have some risk. We should talk about this stuff right now because we're in November. We have some risk coming into the market in February, in March. We do. We have like some risk. Well, Trump becomes president. Whatever that seasonal pullback is that we get every single fucking spring. Sometimes it's late, sometimes it's early. But this one in particular, the market's starting to top in higher frame velocity. So normally we crank into those tops. So if they're going to blow some of that off, either the February, March seasonal weakness or the summer doldrums next summer, we're likely going to get a fucking huge pullback. Huge, massive correction. But I don't think it's today. I don't. It's very rare that it happens. If it does, we'll know it. We'll see it. But none of that's happening right now. So, you want to wrap the year up nice. It's nice. And then here's the last part of this. If we do this move higher into end of year or into January, February, if we do it, it can really suck to trade 0 dates, 1 dates. You get eaten alive in positive gamma. Repricing gamma, you get eaten alive. Like it'll just suck. So spreads are the way. Like get a pullback, put on a fucking spread. Don't look at it. Get a little bit out of the money. Chase the premium as we go higher. Come back and take them off and have yourself a great holiday. It's the easiest trade of the year. It's like one of the easiest fucking trades. Even when it doesn't work. It works so much that it's just an easy thing. And you don't have to monitor that shit. Like, do you guys really want to be fucking trading 0 dates into Thanksgiving Eve or Festivus Eve or like New Year's Eve? You want to be like chasing price? You want to go and hang out with your family and friends and be like, oh, I'm going to check back into the market on New Year's Eve and take this shit off. You know what I mean? Collect my money. This is like time of year where there's not a lot of time left. You gotta. It's November 7th, right? We're wrapping up FOMC. We got 2 weeks. We got 2.5 weeks till Thanksgiving. You think they want to crash the fucking market into Thanksgiving? Fuck no. Want to get a good price? They want to fucking ride it up. So, do you want to be here trading Thanksgiving Eve? That's insano. So just be looking for a pullback, whatever you can get, 90, 86, if you even get it. And try to run this shit up into January, February. I know, civil war at the dinner table. I'm like, seriously. Specific delta, good questions. So like I just ran this. That's a great question. Let's talk about that really quick. So let's look at something here. Let's look at something really quick. So that's a great question. So we were down here, right? We were down here, right? And I'm like, oh, I'm going to get a 580. I'm going to get a 580. We're down here. I'm going to get a 580 and I'm going to get a 600. And I'm going to make a ton of money in here. You know what the spread said? Fuck you. It's all priced in, bro. You make 100% in that trade. That's it. I'm like, what? I'm like, I'll get them a little bit more out of the money. And as we squeeze up, as these get earned premium, I can get like a 300% trade in there, right? 300, 200, 300, cheap, and sell them to you. And you're now the bag holder on the pullback. Right? So if we can get a pullback in here, everybody's long. Everybody's like excited for Christmas, Hanukkah, Kwanzaa. Well, I don't know what the fuck, Festivus, bulled up, loading up on 61, 62, 6,000s. You know, they torch all these book call buyers, and you and I are hanging out down here. Premium gets a little bit cheaper, Delta gets a little bit better, and we get long again. And we'll ride them up again. We'll do it 2 or 3 times. Now you can do this with credit spreads and catch that naturally. I tend to do it with puts or debit spreads, but credit spreads work better if we don't have any crash scenario or I don't know, fucking Black Monday shit. Credit spreads will pay you for the ramp, but you can synthetically do it through debits too if you pick higher strikes. I like debits better personally, and you don't have to go crazy either. Like, you don't think about this for a minute. Like, look on your P&L for the last 3 months. Are you up 50% overall? So what's wrong with putting on a trade for 100% trade and you call it just based on, instead of time, price, you call it at 50% early. You call it a fucking year. You're like, man, I'm out. I just beat the S&P 500. This is like the time of the year to do it. This is window dressing time in the year. Most of the vol is gone. Think about the shit they threw at us in September, October, November 5th, election decided. What else are you going to throw at us? North Korea? I don't know. I don't know what you could throw at us right now to stop this market from heading higher into the end of the year, wrapping it up with a bow and taking the money and run. Yeah, exactly. Exactly. You guys got it. Yeah, just trade sideways, let it consolidate, grab a call spread, and chill. Most of you guys should be thinking about the holidays. You guys made money this year. You should be thinking about the holidays. I'm taking a vacation. I'm going to go do this. I'm going to do that. I'm going to spend time with family. That's what Wall Street does. Wall Street starts taking vacations. They start seeing the families, start hanging out, chilling out, start wrapping up a year. Don't you guys think about taxes? You guys got taxes coming. You got family, friends. You're working balls off all year long. This is when we come into the time of the year where you're gonna get paid. Make sense? What do you want to look at, Baba? Hold on here. I'm serious, guys. Like, I hate having these conversations with you. We have these conversations, and then fucking a month later, it realizes. And it fucking pisses me off because I'm like, fuck, they didn't do it. Like, this isn't the zero-date shit. This is like how you make money. Let's see here. Bottom right-hand side of the screen. This is Baba. Woo! You like Baba here, huh? Give me a minute. I'll look at it right now. Hold on. This is a bull trap right here. That's tough, man. This is a tough trade right now. So this big purple line right here is very, very bearish. Extremely bearish. There's a crash coming to these Chinese stocks. I'm telling you guys what, man. They're telling you they're not going to get this, dude. Like they're telling you like everything's going to be fine. I saw S&P Global saying like invest in China. There's going to be no tariffs on China. There's a trade in here, bullish, but this quarterly velocity is vicious. I don't know, man. I'm kind of bearish here, guys. Yeah, I see the higher trade here. I can't do Baba for you. Harry, I don't like doing Baba here. Harry, what do you want it to be? Harry, tell me in the chat, what do you want Baba to be? Are you bullish or bearish? No, it's okay, Harry. Hold on. Are you bullish or bearish? And like short term, long term. I need like context. Higher, longer term hold. I think it's very dangerous, man. I think it has the potential to squeeze, of course. I have much lower lows coming for Baba. Are you already in it longer? And are you in it long right now? Or I think the way is lower for Baba. Let me ask you a question, Harry. If we instituted right now there's right now the black box is saying China's not getting tariffs. So I understand that for a short-term bull trade. But let me ask you a question. Let's say we go into like February and immediately they start threatening China with tariffs. Where do you think Baba goes? Let me ask you that, Harry. Let's look at Baba in the past. Look at that shit right there. China deal off right there, right? Fucking. I don't know what to say here, Harry. Like, that's vicious. See that? See that? I mean, I see the cross coming back up again. I see the bullishness. I see it. It's better trades here. I can see what you're saying here, right? This comes up. I think it's such a fucking risky trade. But what I really see here is like you got a rejection right there. So I think they're going to trap you in and then staircase your ass down here. I'll have to look into it, Harry. Like, I can see this trade right here, but I get the bullishness right here. I get the weekly coming up right here. I see that. I see the turning up right here, and the monthly is all good, but you're still coming down in the quarterly. There's like a trap in here. You get that? Like, this reminds me of like an ER trade. Like, you're like, yeah, I'm long, and then wham, straight down. You have competing momentum right now, brother. How about Harry, you give me like a day, and I just want to check on that. How about I just check on that? Let me check on the China trade. There's like bullishness in Baba right now, but there's like there's monster momentum rolling down on it right now. Like hidden momentum, hidden bearish momentum. Like we're just getting started on that bear. See it down here? You have one high tick right here in quarterly. That's good. But like if this quarterly momentum just goes more, it could get fucking messy. Your monthly looks great. Monthly momentum looks outstanding. Your weekly sucks. Yeah, blooded right in there. I'd say Harry that it's on paper it looks good long. I think it's very a dangerous trade. I think there are easier trades to take. So maybe not bearish, maybe bullish in the short term. How about this? Bullish in the short term. Very dangerous policy. And if you get trapped, it'll blood pretty bad. Yeah, that's a fair point. If you believe in your long term, you can do it. I can't say no to that. I think there's danger there. Congrats on UPST, by the way. Yeah, I don't know what to say on. I don't know, like the risk reward. There's many other tickers that are there without that danger. I can understand it though. It looks like it's going to happen, like it's going to rip. And I'll tell you one last thing, Harry, is that it's being sold, or that we're not getting tariffs came out today, so I'm sure people are long this trade. Can't say that it's not going to rip or squeeze or break out and go fucking moon. There's probably traders that are going to take that trade, and it will print for them. I just think it's very dangerous. You guys never got in Sound or Lunar? There's a couple more that haven't run yet. Serve still hasn't run, has it? Has Serve done its thing? Like everyone we called out has been running. Yeah, Serve's about to go. Actually, Serve has been going, hasn't it? Oh yeah, it's already fucking moving. I think Serve might be able to come back up and do some more. Oh, is it selling right now? They killed it just now. They just murdered Serve. Oh. Oh, they took Serve for a ride too, huh? 9 at 10.50. Did they have any art today? I'd like to get. I never got long on Serve. Hold on, let me look. When is their ER? Oh, their earnings were today. They're getting smoked right now. They got. Woo! Serve got hammered. Should I buy this? Serve took a bloodbath. They got the nice run up into it. They went from 981 to 1080, but that was it. And they have a 16% implied move. Right here, that's their implied move. I'm going to buy some fucking Serve. Wait for me. I'm trying to buy Serve right now. They hit their implied downside move. Come on, baby. Come on back. Come on back. Oh, yeah. Yeah, I bought serve. There we go. There we go. There we go. We have a 16% up and downside move. It looks like they hit their low. That was 15.56. Anybody know anything about serve? Sound is down right now. You think that's a good bounce? I gotta check their ER. Did they miss? Oh, some people are watching serve on Twitter. Hold on here. They got a good ER too. Huge miss. Did they actually get a huge miss? Hold on. Did they actually get a huge miss? They got a huge miss or no? Did they beat or not? Acquiring Vibu. Oh, the conference call is at 5 p.m. Serve Robotics. November 7th, leading automobiles with Trailblazer. Quick. Oh, not. Oh, wait a minute. Serve Robotics. What did they do? They bought Vibu. Avocado processing robot. Oh yeah, I'm keeping this. I'm keeping this shit. They spent a bunch of cash. They bought a bunch of shit. 5 p.m. Yeah, they're acquiring a company. I got 9.55, so I'm going to clear, I think. Yeah, Vibu. I just saw that. They have an earnings call at 5 p.m. too. Next half an hour. They made their downside move. They had an implied move of 16% on the close here. They hit 15.39. So what do they got to do? Hold this shit down and burn all the calls? Just pin this shit in tomorrow and then run next week? I'm in serve. Yeah, Vibu. This is a good company. I like this company. Oh, someone said they were at $7.30. You fucking son of a bitch. Well, these guys know all about these tickers. All right, sorry, I gotta let you guys go. I'll see you guys tomorrow at 9:30. Tacitly bullish into tomorrow's